Yes, family. Let's get it. Good morning, y'all. Better than running all day. Having is all in my veins. Having it running my veins. It is really gonna be right. Yes, it's all that I've been. It's the type. Hey. Don't trade, babe, but that thing today, they don't feel. Hey. Fill up the move, pick up the base. Yes. What's going on, guys? Yo, what's going on, family? Appreciate y'all for tuning in. We do have news in about 2 minutes. We got PPI coming out in a couple minutes. We're going to let this come out, and then we'll be able to really dissect whether there's an opportunity to play off of this stuff. But it's going to be interesting. As of right now, PPI, headline PPI is expected to increase by 0.1%. Core PPI, month over month, expected to stay the same at 0.2%. Let me go ahead. So we're going to see how this comes out. In terms of how I'm going to be approaching this, family, again, we are literally about a minute out or so. Let's say a couple minutes. Yeah, we're about a minute and a half out or so. But how I'm going to approach this is very simple. All right, very, very simple. You know, if we come out higher than expected, right? If inflation is increasing, right? If inflation goes higher, if we come out higher than expected, higher than this 0.2% month over month, right? I would assume that to be bullish the dollar, right? Because inflation increasing, even if it's from a producer standpoint, right, the cost of goods and services now for these businesses is increasing. They're going to pass that cost off to somebody, right? More times than not, it's going to be on the consumer, which is going to probably increase the prices for consumers as well. So that's very bullish the dollar. If we come out higher than expected, bullish dollar. If we come out lower than expected, then I think the dollar might be weak for today, right? We could see the dollar weakness. We could see gold increase in value. We could see indices increase in value, foreign currencies increase in value, so on and so forth, right? So that's a very quick breakdown. We're literally about a minute out, right? Don't want to spend too much time on the actual breakdown itself. But yeah, higher than expected, bullish the dollar. Lower than expected, bearish the dollar, in my opinion. Okay, so we're about 30 seconds out. Let's see what we get here, family. Again, good morning to every single one of you guys. I appreciate y'all, family. Go ahead and drop your locations in the chat. Drop your location. Let me know where you guys are tuning in from. I see we got Mike in the building, Free Zone in the house, Blown Account Orlando, Money in the building, Terso in the house. What's going on, Terso? We got Miss EJ. We got Carlos in the building as well. We're about 3 seconds out, family. Let's see what this does. We're seeing initial weakness here on gold. Let's see. The dollar must be pumping here. Let's see what we got here. We came out higher than expected. Okay, and the previous numbers were actually revised to the negative. That's interesting, right? They were actually revised to negative. Okay, so we seen inflation increase, guys, right? Again, this is going to be very bullish the dollar here, right? Very, very bullish the dollar, because now we're seeing inflation increase from the producers, right? And as a business owner, right, if the cost of you doing goods and services, if the cost of operating your business is increasing, then you're going to have to pass that cost off to somebody, right? And it's going to be the consumers. You're going to have to raise prices, right, to account for that. And the consumers are also going to have to pay more now, right? So that's actually very interesting to see. So this initial reaction that we're seeing right now is actually warranted based off the release. Now we got to let this stuff play out, though, right? Let this stuff actually play out and see what we can actually get throughout today's session. But we did get an increase in PPI here, right, from 0.2, and this is all month over month numbers. I'm not sure if I'm able to bring up the year over year numbers for PPI, but let me actually just check. But month over month, we are seeing an increase in PPI as of right now. Let's see what the year over year numbers are. So year over year numbers pretty much stayed the same, right? They stayed flat year over year. Besides headline PPI, that actually was revised down to 1.8. And that actually increased. So headline PPI actually seen an increase. So for the most part, guys, we have seen increases essentially almost across the board for our PPI readings itself, right? So again, let's see how the markets react to this stuff, man. I would assume that that's probably going to bring a little bit of fear into the markets. which is probably why the dollar seen that initial spike. But let's see how the market really just continues to play out off of this stuff here, right? Let's see what we get. Let's see if the market is going to continue with this strength maybe in the dollar, or are we going to seek more liquidity before we see that move occur, right? Because we've seen the initial reaction off of the release, and yes, price could just very well push off of that, but look at the reaction that we're seeing, right? We've seen a spike up here in the dollar, and we essentially came all the way back down. Right now, if this does drop for whatever reason, I would be literally expecting this to drop simply just to probably seek some liquidity to then go ahead and push us higher, right? Off of just this release. Now, again, we have to take into account, guys, all the news that we've dealt with for the past month or so, right? You know, we've had a very dovish Jerome Powell, 2 weeks ago, right? We had a labor report that is also in favor of weakness in the labor market, right? Weakness in the labor market is good when we're fighting inflation. Now, today, we had a news event that kind of went against those events, right? A dovish Jerome Powell, a weaker labor market, that is good news for fighting inflation. But a PPI that has increased, that is not good for fighting inflation, right? We have to really understand the correlation between these news events, how it's going to impact inflation, and how that's going to impact the decision making for the Fed when it comes to interest rates, right? So that's interesting. Now, again, the news came out inflationary, which would normally be bullish the dollar. Now, in terms of us as day traders, we have to identify, okay, is the market just going to run off of this? Or do we need to find more liquidity first before we go ahead and give us that initial reaction that we can expect? Right, again, only time will tell. It's up to us just to be patient now and see what the market ultimately does. But we did come out, somewhat inflationary here based off just PPI data itself, right? So let's continue to watch this stuff, guys. Again, I'm not going to be in a hurry to really jump into positions, especially as the news just came out, like literally 4 minutes ago, right? So let's let this stuff actually develop. Even if we have to wait till 9:30, maybe 10 o'clock to actually find some positions, that's fine, right? I think yesterday we didn't take our trade until like 10 o'clock yesterday, right? And that trade was an absolute banger. Ended up running for around 40-50 points. It did come back and hit me at break even, but we still were able to make a couple dollars. Nothing crazy, but we did make some money. I'm actually going to start to adjust my plan, right? I was thinking about this yesterday too, family, right? I was thinking about this yesterday in my trading plan and how I've been doing it. Because there's been so many times this year where we catch an absolute banger of a trade. It runs for 40, 50, 60, 70, 100 points. We do our normal thing. We move our stops to break even. We close something off the table, but then it comes back and hits us at break even. I'm thinking maybe I should just, instead of only closing a small portion of my position when we go break even, I might actually switch it and start closing heavier. Right? Yesterday we ended up closing only one contract, right? Which made, again, we made not much, maybe $100 we made yesterday, which is literally nothing at all. But what if I would have closed maybe 4 out of the 5 contracts, or I had 5 contracts on the position yesterday, or was it 3? It was either 3 or 5 contracts. I only closed 1, right? I think I'm gonna adjust my plan, and anytime I do go break even, especially if I'm in profit 40, 50, 60 points, I might just close a majority of my contracts and then let that runner run, right? Because me grabbing 30, 40, 50 points, we do that pretty often, right? That's not typically that hard. But when we ride out our positions trying to go for those longer term plays, they just have not been working out because of how choppy these market conditions have been, right? These choppy markets, man, have been really, really crucial, right? They have absolutely been extremely annoying to trade, but that's it is what it is, right? These choppy conditions we have to adjust for. So I think I'm going to adjust my plan. And whenever I do go break even, guys, on any position I take, I'm going to close a majority of my contracts and just let a position to run. So then at least when I do go break even and I'm comfortable with that, I'm literally securing a bulk load of the profits. Because these choppy conditions, man, are really not favoring trend traders right now. And that's really what's been getting me, right? Why I haven't been really capitalizing on the big initial moves that we catch. And I end up closing very small partials. Very small profits are made at the end of the day. And I got to adjust, right? I got to adjust. I could have made way more than what I made yesterday across all my accounts, right? Not just the one that you guys can see here on stream. Obviously we are trading this prop firm account. Right here, you guys can see the account balance and the equity. But not just this, across all my accounts, right? I've been closing maybe 10-20% of my position when I go break even, only for it to come back and get hit at break even. And that's annoying, right? So I got to adjust, man. I got to really make some adjustments here to my plan. And I think I'm going to start to close a majority of my position now whenever I do feel comfortable enough to go break even. And then just let that last remaining piece of it, maybe if I close, 60 to 80% of my contracts or my size, and then let that remainder 20 to 30%, 20 to 40%, however much it comes out to, just let that run, right? And see what happens, right? Because then if it does come back down to hit me at break even because of how choppy these markets have been, at least I was able to close a bulk load of my position, right? So hopefully this is making sense, family, right? Because I think this is something that we have to just be aware of, right? We have to make these adjustments, right? Especially when these markets are, again, as choppy as they have been lately. These little adjustments will at least allow us to really capitalize and secure more partials and more profits overall and actually grow our account a lot faster. Because I got to make $6,000 on this account, right? The way it's going now, it's going to take me forever, right? And these accounts, especially on the futures side of things, these accounts are so cheap that I think I need to be a little bit more aggressive to just hurry up and try to pass it. And if we do blow it for whatever reason, cool, we could buy another one, right? Because again, these accounts are so cheap. The risk to reward is still going to be insane if we do it that way. So there's going to be a few different adjustments that I make, guys, in terms of how I manage my positions and how I manage the money. So definitely keep, be aware of these things, right? Because this is what's really going to make you a better trader, right? When you are understanding of the conditions of the market, you're seeing what has been happening, right? Because these things been repeating itself for we go break even, we get hit at break even, and all that good stuff. So we're gonna make these adjustments. We're gonna grow. We're gonna get better at this, and hopefully you guys can learn a little bit from these trade management adjustments that I'm currently doing right now. But overall, though, man, look at what we see here, family. Again, we had the initial spike up on inflationary data, right, on the dollar. It came all the way back down. Now, again, remember what I said. It's either we do actually go ahead and still go higher, in my opinion, or we come down and we seek lower liquidity before we see that possible initial spike. But based off the report that we've seen today, again, this came out kind of inflationary, guys, right? We actually came out a lot higher than expected. We had our PPI month over month numbers last reading come out at negative 0.1%, which was actually revised. And now we've seen a very, very big increase to 0.5%, right? So that's inflationary, right? Inflationary data usually benefits dollar strength and asset weakness, you could say, right? But we'll see. Let's let this stuff play out. I'm not going to be in a rush to try to jump in. We're not going to be in a rush to try to take positions. We're just let the market play out, let the market do what it does. And if we can get an opportunity to get involved, then we'll see it. And if I'm just wrong, guys, with dollar strength possibly coming in, then we'll have to just adjust, right? We'll have to adjust and just see what the market gives us. Because I could be very wrong as well. We seen the initial reaction that I expected. As of right now, it's just not holding up. Right now, there is something else that we can even consider, right? Maybe us spiking above this high right here, maybe we actually did see enough of a sweep of liquidity, right? That can justify, even though we came out inflationary for this reading, the market just really doesn't care because of how deflationary all the other reports we've had come out. Right? Again, I think the thing that really could hold the most weight here was Jerome Powell's tone in the press conference 2 weeks ago. Right? He was extremely dovish, right? And then we had NFP come out. Then we had the unemployment rate come out, right? Which all of that was also very dovish as well, right? That was all very deflationary. So are those reports and is Jerome Powell's tone going to supersede this PPI report? Possibly, right? It is possible, right? That is a possibility that we have to really keep on the table as well. But seeing the reaction that we had so far, where we had the initial spike, which again should have been expected, but now seeing no real follow through on that, that is telling, right? Being able to read this price action is telling, right? So we got to see how this continues to hold. Now we are playing off a level of support, a level of structure. Again, we're either going to just run through this level, or we can actually hold this support and then go ahead and start to fill this wick. That's a possibility as well, right? So we got to let this stuff play out, right? We got the news, we got the data. This is inflationary data, which typically favors dollar strength, but it's going against all the most recent data that we had over the past 2 weeks, which have been deflationary, which favors dollar weakness. So we're kind of at a very interesting point right now, right? So we gotta again just let this stuff play out, man. Let's see how the market, continues to set up throughout today's session, and then we'll go ahead and take a trade based on what makes the most sense at the end of the day. Okay, so hopefully you guys are with me, family. Hopefully that makes some sense, and hopefully provide a little bit of value on just my insight on the data itself and fundamentals real quick. But now, as we let this stuff play out, guys, go ahead and smash the like button for your boy one time. I do appreciate y'all so much. Thank you guys for tuning in. All you guys that have been constantly showing me love, that have constantly showed up to the stream, it definitely means a lot to me that you guys do so. So I just want to give you guys a round of applause real quick. Y'all deserve it, man. All y'all that been showing up, man. The 1003 gang in the building, I appreciate y'all. The Wealthy Visions family, I appreciate y'all. And I want to give y'all flowers, man, for showing up, man. Because this is the hard part of trading, right? Just showing up every single day, no matter what happened the previous day, right? It don't matter if you had a win yesterday. It don't matter if you had a loss yesterday. It don't matter if you got hit at break even like I did, right? Just showing up every single day, family, is going to be the most important thing that you do now, because you have to gain this experience. Whether you're trading or not, whether you're actively going to be placing a trade or not today or not is irrelevant. You still got to show up. Right, you gotta show up. Right, you gotta show up. You gotta put in them hours, man. The more hours you put in watching the charts, listen to somebody actually break this stuff down, the better you will eventually become. Okay. So again, big shout out to my 1003 gang. Shout out to my Wealthy Visions family, man. I love y'all for showing up, and thank you guys for so much. One more favor, baby. Go ahead and smash that like button one time for your boy. It definitely helps me out a lot. Right. If you guys do appreciate these sessions, I'm live here full time now, by the way. Right. This is literally my job moving forward. Right. This is my job right here. Right. Is literally showing up for you guys here on YouTube. So this is my schedule, guys, moving forward. At 8:30 a.m. Eastern Standard Time, I'm going to be live with y'all, breaking down these markets, giving y'all my perspective, my ideas. We're going to take trades together. We're going to win together. We're going to lose together. We're going to hit at break even together. But I really want this to be not even more so a mentor-mentee relationship, which is cool, right? I know some of you guys look at me as a mentor, which is phenomenal, and I'm grateful for that. But I want us to really be a community where it's more so approached as a iron sharpen iron approach, right? Let's get better together, right? Don't just take my word and everything that I say and be like, oh man, that has to be what it is. Like, no, what is your opinions, right? What are you looking at? What is your thought? You have a different perspective than me? Cool. I want to see it. I want to hear it, right? Because again, iron sharpens iron at the end of the day, family, right? And I don't want us to be, looking at just as like that relationship as mentor, or whatever Abel says goes, because that's not true, right? I am wrong as well. I'm human. I take losses just like everybody else, right? And I'm just wrong at times just like everybody else. But if we come back together and we have a community where we collectively sharing our ideas together, see, now that's powerful, right? If you guys don't know what the mastermind effect is, like really understand what that is, right? When we have a collective of people together that are constantly sharing ideas, sharing perspectives, that community itself can only grow from there. All right, so hopefully we on the same page here, family, right? Hopefully we on the same page here, and hopefully you guys really like this approach that we're going, because again, this is my job now, man. I'm here full time with you guys, and we're gonna really turn things up and have a hell of a great time. All right, so just another recap, family, for those of you guys that might have just jumped on. We did have some PPI data come out. PPI is the Producer Price Index. It measures the price of goods and services that these businesses now are incurring, right, that they have to deal with. Now, whenever PPI increases, guess what, right? These business owners have to figure out a way to make that money that they just lost because of now increase in price of goods. They're going to pass that off to consumers. Right now, is there a way, is it a possibility, right? I want you guys to think with me real quick, right? Is it a possibility that PPI can actually be a leading indicator for CPI? Think with me real quick and let me know if you guys agree with me or not. Again, family, let's just all communicate here, right? Let's have these conversations, right? Is it possible that PPI, which talks about the business owners, the producers, is it possible, right, that PPI can lead us into identifying what CPI can do? Again, PPI producers price index, CPI consumers price index. Producer price index is the business owners. Consumer price index is for us that purchase those products and goods. So if we understand that the price of running their business has increased and now their profit margins are starting to dwindle, they have to account for that loss in profit they're going to pass the cost off to the consumers. So do we think that there's a possibility that PPI coming out higher could lead to CPI eventually increasing as well? Possible. I mean, we have been seeing the past couple CPI reports actually come out higher than expected. Now, we do have CPI tomorrow, which is going to be very interesting. I don't know if what I'm saying today is going to directly affect tomorrow's release, but it's definitely something to think about, right? Because we know these business owners, they got to do what they got to do, right? We understand prices have been rising across the board. A big reason why prices have been rising across the board is because these business owners are also getting hit with a lot of different fees that they got to now account for. So some good conversations that we could have, family, that we could really try to break down, man, and really see what actually happens, right? But as of right now, I think it could be something that we could look into to see for a possible effect, and it's something I can actually do my research on too. Like actually look at this last 12 months, right? I want to look at the last 12 months of PPI reports, the last 12 months of CPI reports, and see if there is any correlation with that. Because I've never done it personally, not that deep, but I might have to do that, right? Take some time and really break that down, right? Look at the last 12 months worth of PPI reports, and then looking at it from CPI. I'm not sure if PPI always comes out before CPI for the month. But it's something we can look into, man. Something we can look into for sure and see if there is any correlation there. Bless who else we got in the building today. Appreciate y'all for tuning in. I see we got New Zealand in the house. We got Jamaica, Miami in the building. What's going on, Carlos? Jama in the house. Tyson in the building. What's going on, Tyson? I appreciate you, my brother, out there in Houston. Let's go. We got my boy Eric, Mr. FTP, stand up. Took an L trying to buy YM. We'll get it back, bro. Don't worry about that. Let's see what we got here. That's what I did yesterday. Closed most of my positions. Yeah, I'm adjusting, free zone, right? I'm adjusting, bro. We gotta adjust, right? Anytime I go break even now, I'm gonna be closing probably at least 50% of my positions for now on. I gotta start securing more partials, for sure. We got the boy Roman in the building. What's going on, Roman? We got Warner in the house. What's going on, Warner's way? I see you. Michael Gibbs in the building. Good morning to you, my brother. I appreciate you. Let's see. Once I hit TP1, take 60 to 80% off the table. Things are weird right now, and sentiment is switching. Absolutely, man. That's really probably the best way, especially just how choppy these markets have been. I think that makes the most sense to do that, right? Like really take a bulk load off. You know, whether it's you going break even or you hitting TP1, taking the bulk of it off is probably the best thing to do. Let's see. For today, I think the 1003 game will make a big profit. Absolutely, man. That's always the goal, right? Let's see. How does one even get an entry there? Yeah, right. Let's see. I like roses. Should I give you my address? I mean, you can send me your address. I don't know if you will get some damn roses, but I could send you some, Roman. I could send you a virtual high five. I could send you a virtual high five. I think those are pretty lit. Did I see Germany about to get into Russia? I mean, there's definitely been, reports and rumors that there's NATO forces already fighting in Ukraine and that they might start making their way into Russia. That's a report, a rumor. I don't know if we're going to be that ballsy to do that. Like, I don't know if we're going to be that ballsy to do that. Because if we actually start to set foot in Russia, ooh, yeah, that can be very interesting. I don't even know how what's his name, Putin will respond to that. I really don't know how Putin will respond to that. I know for damn sure he's not going to respond to that. He's not going to be excited about that whatsoever. Because then he really might push the damn big red button. He might really push the damn big red button. And that's not a good sign. So hopefully he's not. Hopefully we just, yeah. That's it. We got Kev88 in the building, and we got Kevin O in the building as well. Appreciate y'all, man. Good morning to y'all. Good morning, family. Linda in the house. What's going on, Linda? Good to see you in the building. Big shout out to the 1003 WV gang in the house. I appreciate y'all, man. Let's see. Abel high five NFT, right? Imagine that, right? Create some high five NFTs. That'll be hilarious. Let's see. I seen what you wrote, Free Zone, before you deleted it. I got you. We could play this for a little bit. We could let this rock. We could let that rock. Let's see. I was listening to Patrick last week. He had a good point. JP said the same thing 6 months ago with different tone, and that was bullish. Yeah, I mean, we'll see for sure. Again, family, we did this report that came out, man. In my opinion, it's not even in my opinion. It's a fact. This report came out inflationary. We just got to see what the market and how the market reacts to that inflationary data, right? Because it did come out somewhat inflationary, right? We've seen inflation increase, or at least we've seen the price of goods and services for producers increase. But how is the market going to react to that? Traditionally, I would say that's bullish the dollar, which is what we've seen with the initial spike. But look what happened, right? We spiked above this range right here and immediately got rejected, right? So it's either the market just doesn't care about this report as much, or we did just have a ton of orders that were sitting above this level. From a technical perspective, we liquidated the highs, and then we had just an influx of selling into the market. We gotta see, right? But as of right now, we did have inflationary data. The market is completely brushing it off. So we gotta just let this stuff continue to play out. We gotta let this stuff continue to play out now and see what we can actually get from this. See what the market does give us, though. All right, let's see. We got Sam Dollars in the building. What's going on, Sammy? We got my boy Jonathan in the house. What's going on, Jonathan? Appreciate you, my brother. Always good to see you in the chat, Jonathan, man. Really is always good to see you, my brother. Appreciate you for tuning in, bro. But yeah, so let's let this stuff play out, family. If again, this is an if, right? Again, I am leaning towards this is bullish or this is inflationary. Inflationary usually leads to dollar weakness. So gold can continue to run all it wants, but if we do start to see this thing slow down up at these highs, right? Because now we are starting to test a level of structure right here. If we take out these highs right here, and depending on how we play above these highs, we might be able to really go ahead and find some, right? If we break these highs, which we're really testing right now, but if we were to break these highs and then form a live OB up here, right, supported by volume, I wouldn't be opposed to trying to fade this, right? But we're gonna be patient with this. We're gonna see what the market gives us, but that's just like my initial thoughts as of right now, right? Again, this could continue to run here, right? Very well could, right? That 2361 is another key level that the market might want to test. But if we break these highs and we create an engulfing pattern supported by volume back within the range, I'll probably short the hell out of that. I'm not gonna lie to y'all. I'll probably short the hell out of that. Right, but let's see what the market ends up doing here. Now there is a chance as well where we don't break those highs, and what if we do start to fall back down even from this sweep right here? All right, we did just sweep these little 3-minute and 5-minute relative highs right here as well. There is a chance that we just do like this, right? We'll keep our eyes on this stuff. You never know, the market can possibly give us a play here, but definitely not going to be in a rush to just jump in, but we're going to definitely keep our eyes and see what the market's telling us essentially. All right, let me see what else we got here now. Let me take a look at a few other things real quick. We're above. Let's see if this holds like this. Again, it doesn't I would prefer to sweep of the overall high, but we did just sweep this little high right here. Is this going to be enough? Are we going to actually start falling from right here? Again, we do have this previous 3-minute candle low right here. And engulfing right here could probably justify a play. We might take a couple stabs today. Right? We might take a couple stabs to see what we can get, but let's see what happens here, family. I mean, how are you guys feeling in the chat about this, family? Do you guys think gold goes bullish, or do you guys think gold eventually sells back off? Let me know in the chat. Do you guys think gold continues bullish, or do you think we actually go ahead and we fall back down? What are y'all thinking? Family? Talk to me. Hablas conmigo, familia. Habla conmigo. What are we thinking? Let me see what we got. Give me 1 second. What are we thinking, family? Habla conmigo. Talk to me. Talk to me, familia. How y'all feeling, man? Let me know. Let me know. Y'all think this just continues to run higher, or do you guys think we do end up falling back down here? What do you guys think? Again, I want to see us take out this high. I would love for us to, form above, give us a play above the 2356s. That's what I would prefer, right? Get above the 20. And again, family, I am looking at pricing from the future standpoint, right? If you're trading Forex, be mindful, right? My pricing on gold is going to be different than yours. The structure is going to be the exact same. Right, the structure is going to be the same, right? For example, I'll show you, right? XAU USD is what most Forex traders are using to analyze gold, right? But futures traders are going to be analyzing the GC1. But the actual structure is the exact same thing. It's just the pricing is different, right? So when I'm talking about price points, I am referring to futures pricing, because that's what I'm currently trading on. This prop firm right here is a futures prop firm account that we're trading together, okay? But pay attention to the structure more than anything. All right, yes, pay attention to the price, but more so just identify my structure points if you want to really stay along with me, okay? All right, so let's see what we get here, family. So again, do you guys think gold just continues bullish, or do you think we do end up selling off here? What do you guys think? Let's see. I think the market is waiting to see if Powell will keep the same dovish tone or change a little today. I mean, we'll see. Jerome Powell, I don't even know when is the next time Jerome Powell's even speaking. When is the next time Jerome Powell opens his mouth? I know he had something, I think yesterday, was it? But I don't even know when's the next time Jerome Powell's even opening his mouth. Yeah, I don't even know when he talks next. Don't know when he talks next, but we'll see. Oh, we do got him today. I'm tripping. We got him today. Oh my goodness. That's going to be interesting. Now that I notice this today, Jama, you might be onto some. The markets might just chill until Powell. Now, what is this? Does it give us an insight as to what he's going to talk about? I'm tweaking, bro. I didn't even realize that. He has more influence over the dollar value than any other person. Yep. I'm tripping. I'm sipping champagne with no special occasion. He also talks next week as well. Yeah, we gotta see what he says, man. Because again, the markets really might just chill until he speaks for sure. Again, remember this. The data today came out inflationary, which usually would lead to gold weakness and dollar bullishness. Right, off of inflationary data, the dollar benefits the most out of anything else. Okay, so we gotta just keep that in the back of our mind as well, which is why I would like for us to go ahead and spike above this high, grab all this liquidity above here, and then produce something that we can go ahead and possibly short. But I'm also not opposed to this just falling, or I'm not opposed to this just going ahead and running. But I'm leaning towards, I want to look for a short as of right now. I want to look for the sell here on gold if it gives me the opportunity to do so. Okay? And hopefully this doesn't leave without us right now, because this thing is starting to push back down here now, right? We could take a little stab here, right, in case this does want to go. But again, I really would prefer above these highs, but we did see the sweep right here as well. Is this sweep right here of this internal range structure going to justify the move lower? It could, right? Did we grab enough liquidity within this little pocket to go lower? It very well could. It very well could. All right. If it does, then so be it. I just have to miss out on my trade. But I really want us above 2356s from the futures pricing. All right. Let me see what you guys are talking about now. Dixie Bull here. We're saying, now that's a great question. Let's see. ICT calls that fake breakout the Judah swing down. Okay. Let's see. Fall, bullish, fall, go to 2300. Okay. Bullish. A lot of sellers in the market. Hold on. There's a lot of you guys that have different opinions. Let me go ahead and start a poll. Is gold bullish or bearish today? I love the polls. It's easier to read you guys' thoughts. A lot easier for me to read the thoughts, right? So go ahead and answer the poll real quick, family, right? Is gold bullish or bearish today? Let me know in the chat. Is gold bullish or bearish today? Let's see. I'm bullish gold. Gold maybe is going to 2300 to sweep the lows. That's what I would like, man. I would like to see the sweep of the lows. I want to see the sweep of these highs first, grab this liquidity, and then sweep the lows. That's what I would like. But this internal range structure right here could also grab it. We did, this is technically like a little liquidity pocket that we're reacting from right now. That could also really cause this thing to fall. Let's see. Good morning from Argentina. What's going on, Joe Quinn? Hulk win. Hopefully I said your name wrong. Shout out to you out there in Argentina, man. Appreciate you for tuning in. Let's see. Gold bullish. Seems like all my mods, they all want gold bullishness. Shout out to y'all. Appreciate y'all. I want to see gold go down more, down to at least 23.31. Bullish time frame, but I want a better entry around 23.17. Okay. Okay. I'm saving ammo. Yeah. Honestly, that's probably what I'm gonna do too. Unless I get what I actually want, which will be the sweep of the highs up here, I'm just gonna wait for Jerome Powell more than anything. Let's see. Gold is trying to push through. Yeah, we'll see. We'll see what happens, man. You had said this comment like 4 times, Collector. Let me see what you said here. You said, you know what's more insane? GTE has emerged as the third meme stock after AMC. You're just trying to chill a meme coin, bro. We're not even talking about crypto right now, bro. Like, we can talk about crypto, but this segment isn't about crypto, my brother. Come on, man. Let's lock in. Let's lock in. Let's see. All dollar pairs are showing a turning point on Forex. Yeah, I mean, look at this. Like, we're starting to see some weakness. Again, we did sweep this little relative high on the 3-minute, 5-minute time frame. This could be enough to really, warrant a sell-off for sure. Let's see. Big Papa Powell gonna handle these fools and indexes, and gold will fly by end of day. He could, right? Again, keep in mind, Jerome Powell is now going to have to, I assume he would have to really answer this, right? So he's going into this press conference with inflationary data in mind. Keep that, just think about that. He's going to be going into this press conference with inflationary data being the most recent data that he has access to. Could that influence his thoughts and his opinions on what he says? Absolutely. Is it going to change his tone from last week or 2 weeks ago? It probably won't. It might not. Right? Last week, or whenever the FOMC meeting was, a week or 2 weeks ago, he was very, very dovish. Right? He was clearly speaking in a way that he expects interest rates to fall sooner rather than later. Right? Which is very, very dovish. Right? So, we'll see. More interested in the long from the 2330 area. I'm pretty sure you're talking about, so you want below these lows down here. All right, I am looking at it from the Forex pricing now. You want it below these lows, and I kind of want it above these highs. You know what's crazy? Here on the Forex side of things, like the Forex pricing, like we actually did spike above here. All right, we actually did get a little spike above these highs. Looking at it from the Forex side of things, see, I ain't even noticed that. We did sweep the highs here if we're looking at it from XAU USD. But looking at it from the future standpoint, we didn't sweep the highs. Okay. Okay. Hey, man. Well, again, we're going to let this stuff play out. We're going to see what this stuff does, man. Let's see. I need you guys to open up, buy positions on gold, add more fuel to the fire so my cells go through like knife. Yep. Yeah. Yo, Roman, you are hilarious, bro. Okay, Jonathan, you're trading futures, Jonathan? Okay. My guy. So you want it all the way down here. Okay. So you want a complete sweep of even this little reaccumulation phase that we went through. Down here. Okay. Yeah, I mean, hey, again, I'm leaning towards that happening based off today's release. But Jerome Powell can absolutely come back and really talk his shit like he did last time and change everything. For sure. He can absolutely do that. Let's see. Thank you for this live call, bro. How many days a week are you live? I'm live Monday through Thursday and on Fridays when there's major news. Right? Monday through Thursday and on Friday when there's major news at 8:30 a.m. Eastern Standard Time. I will be here, clocked in, ready to work with y'all. And I appreciate you for tuning in, Logan. Thank you so much, man. Family, if anybody is first timers on the call, right, this is your first time ever jumping on my streams, family, can you guys drop a 1 in the chat real quick, please? Right, if you are a first timer on any of my streams, Or if you're a first timer of anything that I've ever done trading wise, drop a 1 in the chat, man. Please let me know. I appreciate y'all. Let's see, all labeled ain't easy being the plug. I hear that, Kyle, man. What's going on, Kyle? Hopefully you're doing phenomenal, though, my brother. Good morning to you. Different brokers is different liquidity providers, right? Different price fees comes from different liquidity providers, right? You know, futures all come from the same exact liquidity or the same provider, right? You know, they come from the CME group. I think it stands for the Chicago Mercantile Exchange, right? All futures pricing is always going to be the same. But Forex pricing is always going to be different, right? Depending on, you know, what actual broker or exchange you're going through, right? If you come here to the actual gold and you see this is the Forex side of things, look at how many brokers we have. We have Owanda, Forex.com, FX Open, FXCM, right? There's so many different brokers that you can go ahead and trade gold on from a Forex side, and they're all going to have different pricing, all right? It's not all going to be identical across the board, which is kind of annoying. But at least from the future side of things, it's always going to be the same because it's all coming from the same thing. Let's see. JP belongs in Hollywood. He's going to play the world like a flute and stay dovish. I'm convinced they want to blow up the balloon as much as possible, Warren. It really is possible, right? I think he doesn't. It would be crazy for him to go against what he just said recently last week or 2 weeks ago, right? 2 weeks ago, he was very optimistic. Right, he was talking a very good game, right, which the markets loved. You know, he was saying the second half of the year, he expects inflation to drop tremendously. These are his words, right? He said that by the second half of the year, we're going to see inflation fall again. Technically, we're not in the second half of the year just yet, but like this report that we just seen is not going to help him, right? It's not going to help that cause. You know, so I don't think he's going to want to do a U-turn, though, based on what he said. You know, so I wouldn't be surprised if Jerome Powell does come on. You know, he is very bullish. He is very dovish still. He's very optimistic. And that will cause gold to continue to fly. Right? That will cause gold to continue to run. I ain't even look at the indices yet. And that will cause indices to run. Right? If Jerome Powell is optimistic and he keeps the same tone he's had, then yeah, these things could very well still run higher for sure. And the dollar will just continue to fall, which it's currently doing right now. All right, so it is very possible for sure. We just gotta let him. We gotta see, man. We gotta see what he says. We gotta let him do his thing when he comes on in about 50 minutes or so. Let's see what else we got here. Let's see. Shout out to Dre Trade and Gerson Flores in the building. Fan, can we get a round of applause for our newest member? Can we get a round of applause for our newest member? Can you guys just welcome them real quick to the WV family? Welcome them to the 1003 gang. Come on, family. Can we just get some welcomes in the chat for our newest family members, man? Come on. Big round of applause for y'all, man. I appreciate y'all. Miss EJ as well. I appreciate you for tuning in. Thank you guys so much for supporting. Hopefully, I can provide you guys with some crazy value that you guys come back tomorrow, and then the next day, and then the next day, and then the next week, and then the next week, and so on and so forth, man. So I do appreciate y'all for showing up, man. I appreciate y'all so much. But yeah, let's go ahead and see, guys. Again, the dollar right now is still dropping. Man, the dollar right now completely doesn't care about this inflationary data whatsoever as of right now, right? And we got to see what happens, right? How far are we going to actually fall here for the dollar, right? How far are we going to fall? How far can we actually go if we are? Now, again, we are about to sweep this level of structure, all right? It seems like we're about to sweep this level of liquidity here. Hey, man, if we see this sweep of liquidity, there is a chance where we do actually produce an opportunity that pushes us back up. There is that chance. Same thing that I'm looking at for gold, right? If we do sweep this high, we grab this liquidity above these highs, there is a chance that we get a live OB and this thing comes right back down, right? We got to just see. We got to let the market play out. I would really love for gold to come down to these 2334 levels here, right? Come all the way back down to this level. You know, we do have some imbalance that was left behind back on Thursday last week, essentially, right? We had a little imbalance that was left behind that we could probably even target if we are going to, you know, sell off. But as of right now, we don't have no signs just yet that this is going to sell off, right? So we got to just let this continue to play out. The dollar itself, again, is now just resting at this support. We'll see what happens here on the support level. See if it's going to break through it or if it's going to hold. We are about 20 minutes out from the open as well, family, right? We are 20 minutes out from the open. We'll see what the open produces for us. Now, let's talk about what happened yesterday real quick, right? What trade did we take yesterday? Let me look at my stuff real quick. What trade did we take yesterday? What trade did we take yesterday? We took a gold yesterday, I believe it was. It was Nas. We took Nas. Yeah, I think it was Nas actually. It was Nasdaq, right? So we ended up taking some buys yesterday on the Nasdaq. It was literally right around this. Where was it? It was right here. Where the hell did I take this trade from yesterday? I gotta rewatch the video. Right, but we took some buys yesterday on Nasdaq. I was right here on this level, literally right here. Right, so we took some buys yesterday on Nasdaq when we ended up falling down this aggressively right here. We did see a nice little sweep of structure, sweep of liquidity within this range, fill the imbalance. And we ended up taking this buy right here on this engulfing pattern. All right, literally this exact play right here. Boom. All right, literally on this exact play. When price came back and retested the engulfing, we took our entry. Our entry was like damn near down here. This thing ended up running pretty nicely for around 40-50 points. We went break even on this position. We did end up closing a contract or two. I ended up closing only one contract, so we ended up making some money. And then the market just got so choppy, right? Goes so choppy all the way until about 1 p.m. And then we ended up having one more spike down, right? So I'm kind of glad that we did move our stops to break even because we ended up would have taken a loss if we were still holding it. But the market literally didn't do anything, all right? It really stayed super choppy, super range bound all the way until today, right? All the way until today. So that's what we did yesterday. We had a great entry though. Like our entry was really solid. We just didn't get the real follow through I wanted to, right? I wanted to see this thing continue to break these highs and it just never was able to do so. It is what it is, man. Let's see, NQ buy, GG's Abel I won. Yeah, I mean, yeah, bro. I mean, where was your TP at? All right, because you did grab a nice sell too from the highs. We trapped the market, right? We literally trapped the market. You had caught the sell, I had caught the buy, and we were stuck in the middle, literally. Like we were in profit. Both of us were in profit for damn near 2-3 hours. And then eventually this thing ended up rolling over and stopping me at break even. But nah, that was a solid play, bro. Again, that's why I always tell y'all, man, trust y'all trades, man. Trust your plan, man. You never know. Trust your plan, trust what you see, and just deal with the outcome. That's literally it. Trust your plan, trust what you see, and deal with the outcome. Nah, but that was a nice catch, though, bro. You know me, I ain't no hater. I never no hater. All right, so now we did sweep these highs here, guys, on gold, family. I'm gonna keep my eyes on this stuff, man, because again, if we do produce something that might, be worthy enough of a sell, I'll take it. If not, then I'll just let this play out and not even stress it. Let me see where my trigger line at. Let's see how this plays out up here. Let's see, got out at 18,270s. Nice. Nice. I like that. I likes that. Yeah. Let's see what we get up here, man. Is gold just gonna compete again? Gold can keep running. If gold keeps running, then listen. It could keep running all it wants, man. But we did sweep this high. I got to change my mark from a gas station, right? The gas tank is liquidity. That identifies where I typically expect their liquidity to be resting. But whenever we grab liquidity, it always turns into a check mark signifying that liquidity was taken. For anybody that might be new and wondering, what is the gas tank for? Or what is the gas pump for? Gas pumps are a place where I believe there is liquidity resting. Dealer Nation. Let's see what we got here. Let's see. Dollar below 105. You think the dollar's gonna go? You think the dollar's gonna stay below 105? Is what you're saying? Because the dollar's still falling, man. This thing is still falling. This thing ended up sweeping this range right here, grabbed this liquidity, and then just tanked aggressively. Right, tanked aggressively. Now we just gotta see how this continues to play out. All right, are we gonna continue to fall here, or are we now gonna produce an opportunity that pushes up right back up to the upside? Like, what are you trying to do, dollar? This could very well continue to drop here. All right, this could very well continue to drop. But there is also an opportunity for this, now that we are below this level, now that we are grabbing this liquidity here, or we grab this internal range liquidity, there is a possibility that we do push back up off of this level right here. All right, we swept these lows, we're in fresh liquidity. There is a chance that we do pop back up and start to go higher, or we could just continue to drop. You know, we do have another level of liquidity right here at the 104.15, 514s for the dollar. All right, so I'm just let this stuff play out. Again, I'm not in a rush to try to jump in, family, especially with Jerome Powell coming in about 45 minutes. But I am, if something presents itself, though, I'm taking it. All right, like I'm not in a rush to jump in, but if something is clear as day showing me that this is going to be faded off and we're going to go back up, I'm taking it all day long. No, this is real life, not a phase. Let's see what gold continues to do up here. Let's see what gold continues to do. Let's see, I should have looked for more sales this morning, but I completely forgot we had news today. Yep, and we got news tomorrow as well. You don't do this for playing. Let's see, Abel, I was able to link up with the other Kyle. Yeah, that's what's up, man. Shout out to my little bro Kyle, man. Shout out to little bro Kyle. That's my guy, man. Never even looked at the charts till after news. How can we start identifying liquidity grabs? I mean, that's a good question, but let's keep this simple, right? People try to overcomplicate liquidity grabs, right? And what classifies a liquidity grab? To be honest, family, above every high and every low that is formed, there's always liquidity. Right? That's just what it is, right? Liquidities is created when there's a ton of orders placed around certain areas. So we have this resistance right here, right, that was formed. There was a lot of sells that entered in from this resistance. So all these people that were selling from here, now, where are their stop losses at? Above the highs, right? Some of them probably did move their stops, obviously, to break even, things like that. But more times than not, the liquidity from this resistance rests above it. Liquidity rests above a resistance, just like liquidity rests below a support. So people try to overcomplicate it. Right, especially people that be, you know, online trying to sound super smart. Like, oh, bro, you don't know where liquidity is. Like, bro, just find a high and a low in the market and you can identify where there's liquidity position. Now, the biggest thing that you want to understand is what liquidity is sufficient enough to find some trades off of. Now you're going to have to add a little bit more to the equation. All right, cool. What is the overall bias? What is the overall trend of the market? What is the direction? What is the order flow of the market? Right? Because for an example, I'm using that as an example here, right? But if we're saying that gold is bullish, right, we had a nice strong push to the upside. We did see this nice little correction right now that we're currently in, right? If we are saying that we are in a bullish trend here for gold, then where is their liquidity resting that can now justify a significant move? I would probably say that my liquidity resting is probably going to be below this 2340 level. Back towards this key level right here. Because I think this key level is going to be an obvious area where a lot of traders will start to look for positions from, right? I like to identify the obvious levels of structure, but also identify the fact that there's going to be a ton of liquidity around those areas. So if this is an obvious area that people are now going to look at and be like, oh man, look, we went from support to resistance, we broke back through and now can act as support. Look at the reaction we've seen. I wouldn't be surprised if we sell off, right? And all these people that already started to buy off of this obvious level get liquidated. So my area of liquidation for a buy situation, if we can get it, again, it doesn't mean that it has to happen right now, would be down here below this 2336. Why? Because now we already have people entering the markets. We can see price pushing up. We have people already jumping into these markets for the buys. But we didn't see no sweep of liquidity down here when this low was created. Like, we have this low that was formed, and then ever since then, the market just started to push high, created these higher lows, higher lows, higher lows, so on and so forth. But I want us to liquidate that entire level. Well, let's just take all of these buyers out right quick. And then from that point, we go ahead and we make that bigger move. Right? So that's really how I would approach these markets, right? There's no reason to overcomplicate the concept of liquidity. There's liquidity found everywhere. Anywhere that this market is at, there's liquidity going to be resting. It's just how much liquidity is there, and is it justifiable enough to take that liquidity grab and use that as an entry that can possibly hold for a while. Now, another thing you have to keep in mind is depending on what style of trading you're doing, right? If you are a day trader as opposed to a swing trader, then the levels of liquidity you focus on might be a little bit different, right? If you're a day trader, then maybe a sweep of this internal range structure right here could have been a justification of a liquidity grab to maybe catch a move just up into this range. But if you're a swing trader and you're looking for the bigger move, then you might want to wait for the overall bigger liquidation of this entire move here, right? Because then you more times than not will be able to hold that trade for as long as you want to, right? So again, the style of trader that you are also plays a massive role in the level of liquidity that you actually play off of. Is this making sense, family? Drop a 3 in the chat real quick if this is making sense, because I feel like I just dropped some game for y'all. I feel like I just dropped a lot of valuable game that people charge money for, like, because that's just the reality of it, right? So, all right, but looking at this now, guys, again, we are looking at gold. Again, I would love for us to sell off because the news came out inflationary. The fact that I think we have a lot of liquidity resting below 23.37, I would love that. We just spiked above here. We grabbed liquidity above these highs. We're now flipping back bearish, right, to the downside. Honestly, this 3-minute play could have been an entry right there. That little 3-minute engulfing supported by volume. But on the 5-minute time frame, if this holds like this, right, if this closes like this in 2 minutes, and then we have volume that supports the move, which means this red volume bar is bigger than the white one, which it currently is, that is typically an entry point for me all day long, right? Because now my fundamentals bias, which I believe gold should be weak based off the fundamentals, is now being supported by my technical approach, right? Again, family, I'm not like most traders here that you'll find on this platform, right? Like I rely heavy on my fundamental data and what I believe sentiment can be for the markets, right? And then I just try to align my technicals with that, right? Technical analysis for me comes secondary to what I think the fundamentals is telling me. Now, that doesn't mean that I'm better than anybody else. That's not what I'm saying, right? Because it is what it is, but that's just my approach, okay? That's how I like to look at things, personally. So, yeah, as long as it stays the way it is, man, we have now the volume bar supporting. Volume is clearly increasing here from the bearish side, at least opposed to compared to the last, bullish candlestick. Yeah, man, if this can hold like this, I wouldn't be opposed to taking a short to going ahead and riding us all the way back down, right? Stops will just be above the highs. Because again, if this was an actual a liquidity grab that can now justify or fuel this move, then we shouldn't come back up and really test these highs, right? That's just a theory, right? We're about 30 seconds left. So if it does come back and it just stops us out, then we're just wrong. And this thing is probably just going to seek more liquidity, right? Before that next move. When it happens, right? Like right now, this is a very good looking setup, but I want y'all to understand, we still don't over leverage on our positions, family, right? We still don't go heavy. It doesn't matter how good the setup looks, because we can still be wrong here, all right? We have Jerome Powell in about 30 minutes, and Jerome Powell can also screw up everything that we're doing right now. So keep in mind that as well, but everything that it looks right now, it looks pretty solid, man. It looks pretty solid. Stops above the highs. We could target back to the lows, a sweep of the lows preferably. This is around a 3-to-1 risk reward. That's not bad. Right, that's not bad. Right, now let's see what we got here. Right, so we did close. The 5-minute did support with volume. Right, now we're getting this little pushback, which we always typically do. And on the next bearish 1-minute candle, I'm entering on this. Right, everything else looks good. Right, on the next bearish 1-minute candle, I'll be taking some risk, and then we just deal with the outcome. It's either we're gonna win or lose. Right, it's either we're gonna win or lose. But everything looked good. Right, everything, all of my the criteria is all there. Right, so now we just gotta let this thing play out. But on the next bearish candle, in the 1-minute, that will be when I decide to enter. So let's wait for this last couple minutes. All right, let's see what else we got here though. Real game, thank you for that answer. No, I appreciate the question, Logan. Right, I appreciate the question a lot, man. Let's see. I like the Dixie at these levels. Let's see what we're looking at for the Dixie. I mean, we did sweep down there as well. We did get a nice push back up to the upside here on the 5-minute as well for the dollar. Let's see how that plays out. We'll see how this plays out. All right, waiting for the next bearish closure. I want to see the next bearish closure on the 1-minute. And then I'll probably take some risk. Let's see. Hoping for a power blunder so I can get an entry real quick. Let's see, I'm going to wait for JP. Hey, there's never nothing wrong for waiting for the big homie. Again, Jerome Powell, man, he comes live in 30 minutes. Depending on what he says, can absolutely shake everything around for sure. Right? Absolutely. Absolutely, it could. I see gold buys for me. Is that what you're looking for, Janoy? Again, family, if you guys are not in my Discord, right, I highly encourage you guys to join my Discord. Because in my Discord, you guys can actually send your markups, right? Send your markups, man. Let me see what you guys are looking at that has you, looking in that direction, right? Because then we can analyze it together. Again, iron sharpens iron, family. Iron sharpens iron, right? I'm interested to see what is causing you guys to feel or look at the market a certain way. Like, I'm very interested in that, right? Extremely interested to see how it plays out. All right, but again, according to my rules, family, all right, I'm getting close to taking this trade. Everything looks solid for me. Still waiting on this, right? We did get a little. I kind of wish that we would have closed as an engulfing here on this little bearish candlestick, but I'm getting ready to enter this. If we can go ahead and now break this low, break previous candle lows, and I'll probably be in this. Again, I'm not risking much though, right? We are trading, we are trading the minis here, so we're not going to be over leveraging. We're not going to be risking too much whatsoever here, family. Right, but I want to see us now flip back bearish and then start to push lower. Honestly, the safer thing might be just to close back below the 50-period moving average, but we're going to be, again, we're going to be patient. We're going to let this play out. We're going to let this play out. Let's see what we get here. Come on. Start to push lower. Start to show me signs. Show me signs of weakness. Show me that you're about to start dropping. A nice close below the 50-period moving average here on the 1 hour, on the 1 minute, really would be the best. Not just a bearish candle close, because that didn't do anything for me. But show us that you want to go bearish. If not, you can keep running. That's fine. I'm not in you anyways, right? We're not in the entry anyways, right? So if you keep running gold, then that's fine, right? But for me to enter, I gotta wait for some. I gotta be very specific with my entries real quick. So I'm being patient. Especially with Jerome Powell approaching, we definitely want to try to get the best confident entry possible. So if this continues to run, then so be it. But I'm still actively watching this bad boy. We're going to see what this market gives us. Come on, yeah, show us some weakness here. Come on, show us some weakness. Okay, there we go. Yeah, I'm going to take a little bit of risk here, family. I'm going to take a little bit of risk here. Again, we're risking maybe like about 1.5% on this trade. All right, risking about 1.5% on this position. I'm comfortable with the way it's been playing out. And now we just got to let it play out. It's either we're going to win or lose on this. All right, win or lose, it's irrelevant, right? The setup was there. I really like the criteria. I was already looking for bearishness based off the news. We just initially spiked up a little bit higher. We ended up grabbing some liquidity as well. We ended up in closing, on a 3-minute time frame back bearish, 5-minute time frame as well. Closed as a bearish engulfing, supported by volume. Everything looks solid, man. So I'm comfortable taking this risk, and we're going to just deal with the win or the loss no matter what happens here. Now, if we can get a solid push below this level that we're testing right now, like this key level that we're currently on right now, we really need a strong close below this level for us to truly be confident about this. I mean, I'm confident, but like a strong close below here would really do us good, right? Because we are literally resting on top of a support as it is, right? A strong close below here would be phenomenal for us, right? Like we really would be great if we can continue to drop here. So, but we already took some risk, man. Now we gotta let this play out. Again, we risked about 1.5% on this, almost 2%. And now we deal with it. Best case scenario for us, obviously, is that we go and profit enough to where, we can move our stops and secure some partials before Jerome Powell go live. That would be best case scenario, right? That we can just get into profit. And then we can go ahead and manage our trade accordingly, before Jerome Powell opens his mouth. Because again, Jerome Powell, man, if he talks the way he talked 2 weeks ago, then gold is probably going to continue to fly. Right? Just being honest, right? If Jerome Powell has the same tone from 2 weeks ago, then we better have our stops at break even. I'm just being honest, right? Like for real. Because Jerome Powell, again, he was very, very dovish 2 weeks ago during the FOMC meeting, right? Which caused gold to go extremely bullish. So hopefully we can get into profit, or hopefully this trade itself just plays out before then, right? Like I'm not opposed to, any of this happening, right? Hopefully we can, just be either at break even before he go live, or we're just gonna have to deal with whatever happens. But either way, we took the risk, and now we just gotta let it play out, man. That's the thing about trading, guys, right? We can't be afraid to take the risk when the setup is there, because no matter how good the setup looks, you can have the best looking setup in the world and still take a loss, right? But it's those moments that you miss, that you hesitate on because you're scared of a loss, that actually end up playing out. No, every time your setup is there, every time you have your confirmations in place, you gotta just take the trade, right? Trading is all about probabilities at the end of the day. Literally, is all about probabilities. We're not gonna win 100% of these trades, right? We can have literally 100 trades. Every single trade that we take, all literally are A+ setups, and we still won't win 100% of them. That's just the reality of trading, right? Trading is truly a game of probabilities, right? But if you are avoiding the good setups because you're now fearful of taking a loss, then you're going to also miss out on the good trades and the good wins. And that's where we start to mess up, right? You got to take the trade. You got to be okay with the outcome of the trade. And you got to come back tomorrow taking that same exact setup that you just lost on. When you're comfortable enough to do that, family, where you take a position, you lose on that same setup, but then the next day you take the same exact setup because you know the probabilities are there. See, that's when you really start to grow as a trader. That's when you get better as a trader. That's when you improve. So, hey, man, that's why for me, I don't care about what happens here, right? I'll still take the same exact setup every day of the week, no matter what the outcome of this position is, whether we win or lose, right? Like I was saying yesterday, right? Yesterday, we have to be able to balance, guys. We can't be too high and we can't get too low. We can't get too excited and we can't get too upset. Trading, it is what it is. These markets don't give two shits about us. And the one thing I think we have to understand the most is that there's so many different factors that influence the decision making of these markets. Right? There's things that are happening in the background, right? With the big dogs, the big players, that we just don't have no control over. This market is extremely volatile because there's so many different factors that impact the price of it. Whether it's Jerome Powell opening his mouth, whether it's political tensions happening with wars and things like that, whether it's interest rates increasing or decreasing, whether it's CPI, PPI, right? Whether it's NFP, whether it's all these different news events that we all know, there's so many different factors that are constantly pressuring these prices. So yeah, we can have a great looking setup and still take a L. It happens. That's what happens when we're day traders. We have to be okay with the outcome. We can't get too high. We can't get too low. We got to really balance our emotions and stay in the middle. Stay level-headed no matter the outcome is. And if you can do that over a prolonged period of time, then you're going to see success. You're eventually going to grow and you're eventually going to scale your accounts. That's just a fact. Are you guys feeling me, fam? Are you guys with me? Drop a 4 in the chat real quick. Drop a 4 in the chat if you guys are understanding what I'm saying. Because this is some value right here. Let's see. Make sure to smash the like button. Absolutely. Definitely go ahead and smash that like button, man. Yo, Roman, I appreciate you, my brother. Or we got Hitmans on the clock. Definitely smash that like button, man. I appreciate y'all for that. Family, we are about 25 minutes out from Mr. Jerome Powell, by the way. We are 25 minutes out from Jerome Powell opening his mouth. Again, hopefully we can continue to drop more. I would love for us to really get back towards this 23.48. Below 23.48, I think that at that point, especially depending on how close we are to Jerome Powell, we might as well protect our trade just in case Jerome Powell does what I think he's going to do. I think Jerome Powell really is going to speak very optimistic, which is not going to benefit our trade, but we really got to be aware of that, right? So hopefully we can continue to drop here. Hopefully we can get into enough profit to where we can justify moving our stocks to break even. And then hopefully Jerome Powell just doesn't screw us. Right, just being honest, right? Hopefully Jerome Powell doesn't screw us. So, all right, let's see. Spitting bars like the baby, the baby do go hard. Now the baby is fire. I haven't heard a bad freestyle from the baby yet. I haven't. Being honest with y'all, he's really go crazy. Let's see. No FOMO gang. Yeah, never no FOMO. FOMO is one of them. FOMO is like a silent killer. It really is. FOMO is like a silent killer. Let's see. How far do you see ES going down during the correction? I like 3,600. Let's take a look at ES real quick. I mean, if ES does turn around, if it does start to fall, I will at the very least. Again, this is the thing. These moves that we're catching right now, I think are going to be short-term moves. Right? I think are short-term. I think ES does eventually go long-term bullish. So I wouldn't want to go too crazy where I think this thing can go. But I wouldn't be surprised. 3,600 is crazy. I don't know. 3,600 is that's a bold drop. I think we can at the very least, obviously, probably come and just fill the wick we left behind. But I would like to see us come back towards 5,100 short term. If we can do that, that would be great. A nice little. I don't even know if we get that far though, right? But I wouldn't be opposed. I wouldn't be opposed to something like that, right? And again, I am long term bullish this, just like I am also long term bullish gold, right? I'm just looking for a possible quick little move lower to grab some liquidity. Right, I would love for us to completely wipe out this entire low at 23.37, and then below 23.37, I wouldn't be surprised if we did start to go back up. That's what I would like to see. All right, so this is more of a short-term play here, guys, on gold and on indices and on anything, right? Because I do think long-term we do continue to, to see a lot of upside, and that's just because again, just based off Jerome Powell's approach, recently. That's why, right? Jerome Powell was very clear as to what he felt. He was very clear on his thoughts and his opinions. His confidence was definitely very convincing for the markets, and the markets really, liked it, right? And that's why, the markets ended up running on his approach. But I just want to see a short-term fall off. Like, I just want to see us grab some of this liquidity. All right, we had this little trend line that we can even probably drive. Like, I mean, we did sweep a couple of times, but yeah, I just want to see us. I want to see us do a little quick sell-off and then possibly go ahead and go higher. But long term, I am bullish. I want to make that clear. I am long term bullish. These things, I just want to see if we can catch a little short fade off. Right, using today's report and the sweep of liquidity as like a confluence. Let's see, my next dog. You're gonna name your next dog the baby. The baby. You know what's crazy? We call my daughter that. What's going on, baby? The baby. The baby. My daughter calls herself the baby. It's hilarious, right? When she speaks about herself, she literally talks in third person. She's like, the baby wants this, the baby wants that. That's hilarious. She literally talks in third person. Now, remember what I told you guys about this level, family, right? We really got to close below this level here for us to have any safe play here, right? We got to get below this 23.54. This 23.54 right now is holding very, very strong. All right, and we're seeing, pushes back to the upside. But as long as we can, truly close below here on these higher time frames of 15 minute 30, I think we still have a solid play to go. But this level is holding pretty strong where we're currently in. All right, so we got to let this play out. This level is going to be do or break for us, do or die for us. Let's see, bro dropping some mad value there. Here to show love. Yeah, I appreciate you, Tyson. Appreciate the 4.99, man. Definitely means a lot, my brother. Thank you so much, man. Let me give you a round of applause for that. Definitely means a lot. I appreciate that. Thank you for supporting me. Thank you for supporting the channel, my brother. Let's see, taking a stab at YM sells. Okay, I'm probably chilling until after tomorrow. Let the news play out. Nice. Let's see, when platinum and oil is up, gold goes up. I mean, there's a correlation. I don't know the correlation with oil, but definitely with platinum, right? Platinum is, again, a special metal, just like gold is, right? So if platinum is going up, then there's a good chance that silver and gold is also going up as well. Right, I'm not too familiar with the correlation with oil, though. There could be something, though, with that, but I'm not too familiar with that. We are about 20 minutes out from Jerome Powell, family. We did get a strong close back above here. This is not what I want to see, to be honest with y'all. I definitely don't want to see this right here. All right, we did get a nice strong engulfing right back on up to the upside above the range, supported by volume. That's not too convincing, to be honest with y'all. That is definitely not what I wanted to see. But it is what it is, man. We already took our trade. We took our risk, because this right here looks bullish as hell. I'm not even gonna lie. This play, that engulfing back to the upside, supported by volume, in already a market that has been doing something like that. Yeah, that doesn't look the best. I'm not even gonna lie to y'all. That doesn't look. I think this does push up a little bit higher now, especially just how we just closed and stuff. Unless the market want to go ahead and completely erase this engulfing, then we'll be lit. But this does not. This does definitely a little concerning in terms of our trade. I really wanted to see a nice strong follow through lower. All right, we had a nice strong close below the level, But the fact that we close back above it, oof, that's tough. That is tough. That is tough. I'm not even gonna lie to y'all. I'm even thinking about, do I just get out? Do I just get out? That is tough. Yeah, I might have to manage this position. I might get out of this, family, and then let Jerome Powell do his thing. The only thing is, if I get out and this thing falls, I'm gonna be upset. But we do have Jerome Powell as well, and I don't think Jerome Powell is gonna be. I don't think Jerome Powell is gonna be helping our trade out neither. Let me see. How much we got? 2 minutes left on this candle. If you guys get out, I wouldn't be upset if you guys even got out of this, right? I'm gonna wait a couple more minutes. I want to see, because if we do flip back bullish, I'll be getting out. I'll be getting out for a short trade loss. If we do flip back bullish on this current candle, I'll be getting out. But I want to see how this plays out. Yeah, because I definitely didn't want to see this. Like, now this looks good for a freaking buy situation, to be honest with y'all. But let's see. I'm gonna let this last couple minutes play out. Let's see. Once I see a yellow, once I see this, yeah, I'm out. I'm just gonna close out for a very short loss. All right, I do not like how that closed. I do not like how that closed. All right, let's make sure we manage our positions correctly real quick. I'm gonna get out. And now, since we're so close to Jerome Powell, yeah, we might as well wait for Mr. Powell himself now. The only thing that sucks, if this does fall, then it is what it is. I don't like how that closed though. Especially not on the 15-minute time frame. I don't like how that closed at all. All right, so I'm out of that position. We ended up literally taking a very, very small loss there, which is cool. Now we just gotta let this. Let's wait for Jerome Powell now, right? Let's wait for Jerome Powell. See what he gotta say. Let's see what the rest of the market is doing here. We got the Nasdaq still pushing higher here. We got the Nasdaq still pushing higher a little bit. What are we doing? We ended up sweeping this high, sweeping the range high real quick. Okay, what's YM doing? I see my brother Eric over here said he was looking for YM shorts. Let me see what he's trying to look for. We got the 1 minute engulfing above the highs. 1 minute engulfing above the highs. I'm gonna keep going. I'm gonna keep rising. Let's see what we get here. What you about to do now, gold? Again, we gotta stay. Don't get emotional, family. Right? Remember, we gotta stay middle. Right? No matter what happens with gold now, we already closed our trade. Right? Whatever happens next, who cares? Right? We can't get too high. We can't get too low. Remember, we gotta control our emotions the best we possibly can. Right? I think it's still a very solid play for us to get out, just because I really don't like how we ended up closing, especially supported by volume back above our range. So I'm comfortable with us getting out the way it is. No matter what happens here, I'm very comfortable with us closing when we did. If it drops, so be it. Right? We'll still have plenty of time to try to get in. All right, let's see. Closing bullish. Let's get out. Gold is tanking for me. Hey, Kyle, then take it, bro. You know, if you truly think it's gonna fall, continue to fall, then by all means. Again, everything the reason we took the short was valid as hell. Right? The reason we took the sell was valid. Right? I don't like how we closed. I don't like that we're so close to Jerome Powell. I don't like the fact that Jerome Powell was probably going to send this thing higher anyways. Right? Again, if Jerome Powell continues with the tone that he had last week, then he's probably going to be very optimistic. He's probably going to talk down the fact that PPI came this high. Right? And it's probably going to send gold flying, in my opinion. I could be wrong here and this could still fall. The thing is, we still have opportunity to get in. Right? This is the beautiful thing about day trading, family. Even if gold did fall, right, and we actually say the 5 minute engulfing, if we do come back and erase the 5 minute engulfing that took me out, or that caused me to get out, we can still use that as another area to get in. That's a beautiful thing about trading, right? Especially when you understand how to read price action. So again, whatever happens, happens. But if y'all feel like it's still gonna fall, by all means, trust yourself, man. I'm not here, family. This is what I want you guys to be clear, right? I'm not here to try to make you change your mind. Right? I'm not here to change your perspective that you currently have on the markets. I'm just giving you my perspective. right? And I would love for you to give me yours, right? Which is why I love for you guys to join my Discord. And in the Discord, we have this section right here called Trade Markups, right? And in this section, we'll be able to see what you guys' thoughts are. Like, I would love to see you guys' thoughts and opinions on these markets by looking at this stuff, right? So definitely join the Discord if you guys don't mind. And in the Trade Markup section under the Traders Lounge, let me know your thoughts and opinions, man. Again, iron sharpens iron, right? We're all here to get better. That's the whole point of the stream. That's the whole point of my community. It's for us to have an area that we are comfortable going towards, expressing our opinions, our thoughts, showing our markups, showing our ideas, and then we can all collectively agree or disagree on it. Now, again, it still doesn't mean I'm here to change your mind or your bias. Just because I'm looking at something one way doesn't mean, oh, Abel said I'm going this way, let me change my bias. Like, no, trust yourself. Especially if what you've been doing has been working. Don't let nobody on YouTube, don't let no random person on YouTube get you out of your positions. It's best for you to just take that loss if they are right. Because that's growth. That's experience that you're getting. That's what it's all about. That's what it's all about, man. We're here to grow together, right? Iron sharpens iron, family. All right, so let's see. We are about 15 minutes out. A little bit under 15 minutes out here, guys, from Jerome Powell. We'll see what Mr. Powell got to say here in a few minutes. I'm going to see if I can find his live stream, see where we can get his live stream up real quick. You guys know I like to watch Mr. Powell talk. I like to watch Mr. Powell talk. You know, I think he's a good talker. I got the. That's a bankrolls. Let me see. Actually, is Meet Kevin live right now? Does anybody know if Meet Kevin's live right now? Is Meet Kevin live right now? Y'all know me. I love me some Meet Kevin. No homo. No Diddy. I love me some Meet Kevin. No Diddy. Let me see. Meet Kevin. Yeah. Meet Kevin. Yeah. Let me see. Where you at? Biddy bounce. Okay, he is live right now.
Well, we got our green candle right here on GME. There we go. So, GME finally deciding.
Let's see what we got here. Getting out equals capital preservation. Absolutely, bro. It really does. Capital preservation. All right, so if you want to join the Discord, Logan, just go right to this link right here. And then it'll literally tell you Discord access for free, right? The reason why I do it this way instead of just dropping a Discord link is because that's how a lot of scammers and just people that are gonna show a lot of random stuff, that's how they join. All right, so I don't send a direct Discord link, because then a lot of people are just gonna start talking a whole bunch of shit. All right, and there's a lot of scammers be jumping in the chat. All right, so you just go here, go to that website, sign up through WAP if you don't have WAP just yet, and just click on Discord access. It is free. You don't get charged. Obviously, it's free to join the Discord. But that's how you do it, and that's just how I'm able to avoid all the damn scammers and the spammers and people joining trying to shill their crypto. Right? You're gonna be, if I just sent the Discord link, there's gonna be a bunch of people just sending a bunch of crypto projects, or people just sending a whole bunch of nonsense. Right? So just go to that link right there. Just click on Discord access. You're gonna have to sign up for WAP, but then yeah, you'll be able to join. Let's see. Right after I said it, went back. I got out, bro. I'm taking your advice. I mean, again, bro, just always trust yourself, bro. But again, this close to news, unless I was in profit already and I was break even, I probably would have got out anyways, right? But us closing out so far, it looks like it was a probably good idea. Like, as of right now, it looks like it was a good idea for us to get out when we did. You know, we'll be a little bit more negative, and I don't like being not before Jerome Powell, right? But you guys see what we did here, right? That's actually a lesson, real quick, right? The sell itself looked money. Right, the sell itself looked good, right? We did end up dropping from our initial entry. We ended up dropping around, what about, I have literally nothing, around 5-10 points. But look at how we played, right? Look at how we played price action, right? We took the sell. We had a solid close back below. But the moment this candle came back up and engulfed the candle that gave us a confirmation for this to continue, and it was supported by increasing bullish volume, oh yeah, that's telling us, man, this might actually go higher, right? You know, so even though we got out and took a very small loss, that was perfect trade management, if you ask me. Like we executed that management, we executed or we managed that trade, I think very, very well, in my opinion, right? Because now we're again avoiding all this unnecessary drawdown, and at this point, we probably would have gotten stopped out. I don't think there's no reason why we don't fill this wick at this point, you know. So that is actually not a bad play here, right? That is not a bad idea that we got out when we did. Let's see, Abel, you should have took the buy off your trigger line. I was looking at my trigger line too. I have it on my other screen over here as well. Where I actually have, if I showed you my other screen, y'all would be like, damn, Abel, y'all really, you use all that? And I do. Because I have quite a few stuff over here. I have my trigger line. I got everything on my other screen over here. And the reason why I wasn't looking for the buy, though, is because, again, fundamentally, I was leaning towards bearishness. Right? Fundamentally, I actually wanted to see gold drop. And gold still could drop, right? But fundamentally, I was bearish. So I already had my bias that I was already leaning towards. And then once we had the sweep of the highs, we had the engulfing back down supported by volume. I was like, okay, you know what? We might actually fade this and see what that happens, right? But the trigger line itself, if you was already coming in with the markets with a bullish perspective, then yeah, this trigger line would have played out beautifully for you. Right? Look at that, right? We engulf back to the upside, supported by volume, right? The trigger line now is also, we close back above the trigger line. Honestly, we probably could have taken that, but not this close to Jerome Powell, right? Like when we did get out, because this engulfing came in, we could have flipped our bias and said, man, actually, you know what? This might go bullish and we'll be in profit, right? And if Jerome Powell wasn't here, we probably we might have considered it, right? But hey, that's a valid find though. Hopefully that trigger line is helping you out, Sam. All right, because that play is that's a nice little strategy right there, man. When you actually use it the way you want to use it, for sure. Because that did bounce off nicely off the 3-minute and the 5-minute time frame. Listen, I'm happy that we got out when we did, though. So far, this is a very W day so far. Even though we took a little small loss, it's still a very W day because of how we managed that position so far. We're about 6 minutes out here, though, from the open, family. 6 minutes out. Not the open, but we're 6 minutes out from Mr. Powell himself. Let's see what Mr. Powell got for us today. See if he's going to give us an opportunity or no. Let's see what Mr. Powell got for us today. Watch what the real deal do. Let's see what Mr. Powell does. Let's see what Mr. Powell does. Pull up the strap. Let's see what we get here from Mr. Powell, family. Let's see. I work from home, taking calls and looking at charts ain't the easiest, but I'm trying. Gotta keep going, man. You're doing great, though, bro. The beautiful thing is you're still showing up, though. Right? That's the biggest thing, right? Again, whether you're taking a trade or not, just showing up and listening to, whether it's myself or somebody else, just go through the process every single day, is doing so much for you that you probably don't even realize. You know, so showing up every day is just the most important thing that us as traders really need to do, right? No matter how we're feeling, no matter if we're trading or not, no matter what happened yesterday, last week, we got to show up, man. We got to show up every single time. Absolutely. Let's see. Abel, you ever heard of the business model of the markets? I'm not sure what you're referring to, but I'm pretty sure I could probably look some up. The business model of the market. As of right now, I haven't heard of it. Unless it's called a different name. So let me see what we got here. Business model of the market. Let me see. I'm about to search this up in. I'm gonna search this up in my AI real quick. Let me search this up in AI real quick. It do a this through. Let me see. Discipline you go far when you do things like show up. Absolutely, absolutely. If you don't mind, can you speak on stacking orders, like when to do so? Honestly, it's never a. I don't like stacking orders. Now I'm okay with throwing multiple positions. Like for me, or if I'm trading futures, I'm okay with throwing 2-3 contracts on a position, right? Because then I can always close some and close partials that way. If you're trading forex and you're throwing lot sizes, I'm comfortable with throwing, somewhat of a bigger lot size so that I have enough room to actually close partials. But adding additional entries, that's a strategy in itself, right? And what most people do, and this is the downfall of most traders. I'm just being honest here, right? If I'm calling you out and if the shoe fits, then take this for what it is. What most traders do is this, right? Let's say they enter here, first entry here, right? The market falls, and then they end up entering another position. If you are going to stack orders, you never want to stack orders when you're already in drawdown to begin with. But that's what most traders do. Most traders will take the first initial trade here, right? It falls down, now they're in drawdown, and they enter again while in drawdown. Hell nah. Now you just essentially doubled your risk, and you're probably going to end up losing on both, right? So if you are going to stack orders, do it when you're already in profit and you're already going in the intended direction. For an example, if we took this buy right here on gold, right, we have our initial entry. That's cool. Now, as the trade runs and we go ahead and we start to clear more levels of structure, get above more key levels of structure, like I said, like if this gold continues to run here now and we get above here, 2361, see, then you can add another position. Okay? Entry here, we're in heavy profit, we go break even, then you are justified to go ahead and enter more positions and start to stack your orders in a trending market. Okay? But entering positions when you're already in the negative, which is what 90% of traders do, that is just a recipe for a blown account. That's just a recipe for disaster. You want to stack orders when you're in profit and you're able to secure your initial order by going break even. Then you can go ahead and start to add more positions and scale in if you really want to. But most people don't do it that way. When most people are in profit, they don't think about adding more positions because they're so focused on their current one. But when they're in the negative, now they're thinking about adding more positions because in their mind, they're like, oh man, wait, I'm in drawdown. But if my entry here, my second entry now reaches to my original entry, now I'm in heavy profit. And again, that is just super dangerous. That is dangerous, right? So if you're going to stack orders, you have to do it when you're already in profit and your initial entries are secured. You can't lose on your initial entry. Then you can go ahead and justify adding more positions. Hopefully that makes sense, man. But trust me, I know so many traders that do that. That add it when they're down, when they're in the negative. Like, bro, when you're in drawdown, why would you add more? Why would you add more risk to the equation? Unless you initially planned for it. Let me add this to it, right? Unless you originally planned for it. For an example, if you are risking 1% for a setup and you want to have a scaling in plan and you're dividing your overall risk for that setup, then you can do it like that. For an example, right? You enter here. Again, the whole setup is for a buy. The whole setup. Your initial entries here, right? You're risking 1%. Damn, this market is moving like crazy. You're risking 1% as a whole. And you break down your entries and you split your entries based off that 1%. All right, so let's say you want to take 4 entries just for easy math. 1% total, you risk 0.25% your first entry, you risk 0.25% your second, 0.25% your third, and then 0.25% your fourth. And if they all lose, you still lose that overall 1%, then cool. That's fine, right? That is fine. I know traders that do that. That is fine, right? But if you're risking your whole 1%, which is your max for the setup, and then you're in drawdown, and then you risk a whole nother percent, see, that's where it gets dangerous, right? So again, it's scaling into entries and stacking positions is a skill in itself, right? If you're not profitable with just one position, then don't even bother trying to do anything else. You're just gonna ruin yourself. I promise you. Yeah, Powell is talking. Let's go ahead and see what Powell's about to say. I do got Mr. Meet Kevin up here as well. I'm gonna go ahead and bring. Let me see if I can make this. Come on, man. I got Mr. Meet Kevin's stream up. He's definitely one of the better platforms that I like to listen to when I'm talking fundamental news. All right, and we're going to see what he got to say when Jerome Powell's talking, because he's extremely knowledgeable. All right, this dude is probably one of the smartest people on YouTube, in finance as a whole. Not even on YouTube, but just in finance, he's probably one of the smartest people for sure. All right, let me see. What's good, fam? What's going on, my brother Matthew? What's the word? Appreciate you for tuning in. And by the way, family, could we please get a round of applause for Matthew? That boy did request a payout from his prop firm and has gotten his first ever futures prop firm payout. That deserves a round of applause, man. That deserves a round of applause, man. Shout out to that boy. Again, big shout out to you, bro. First payout with a futures prop firm account. And it was a nice size payout, too. Let's be honest here. That's a monthly salary for most people. All right, so big shout out to my brother Matthew, man. First payout in the futures account. Hopefully more to come, bro. And I'm grateful to see you just do your thing, man. Absolutely grateful to see it. All right, let's go ahead and see, family. We're
$800 trades to
gonna see what Jerome Powell is gonna say in a few.
So, it looks like they're gonna do a panel. That'll be really boring. But anyway, yeah, if you want all those buy-sell alerts, obviously can't make any guarantees on trading, but I send all my alerts on when I see line.
All right, come on. Don't be promoting your stuff. Don't be promoting your stuff on my stream, me, Kevin. I know we were reacting to your stream, bro, but don't be promoting your shit on mine. What's wrong with you? Hey, we don't want to hear your coupon code that expires tonight or whatever you always say.
For those of you that joined back in like 2019 or.
All right, you're still all right. We're gonna have to learn. All right, let's see what you guys are talking about though. Let's see. I learned market structure from watching you, but when I learned about the business model, that's when everything. Yeah, Jano, if you don't mind, man, definitely send me some information on that, bro. Send me some information on what you mean the business model of the market, because I'm not sure what you even mean by that, to be honest with you. So if you're in my Discord, bro, definitely send me some information, man. That'll be pretty dope to look into. Let's see. Martingale equals account arsonist methodology is absolutely. Let's see. Got in for buy on gold. Shot up, recovered my loss. Let's go, Kyle. Let's go. Round of applause for Kyle as well, man. Let's go, man. I'm chilling in oil buys. Let's get it. Abel, I tuned in on the credit report AI bot. Got my LLC and EIN on the road to a 700 credit score. Let's go, man. Let's go. That's what's up, bro. I love it. I love it. Let's see. Trade all Swiss. Joker, did you actually take those buys you talked about the other day, by the way?
Powell, I'd like to begin.
Did you take those buys? Let me know in the chat. But let's listen to Jerome Powell.
Of the U.S. economy and where Fed policy is right now.
Uh-oh.
Thank you, Claire. I'd be delighted to. Let me say it's great to be here. Thank you for being here. And Klaus, thank you for this.
Let me know if I need to turn up the volume, family. Let me know if you guys can hear him.
It's a pleasure and an honor to be here. So the U.S. economy has been performing very well lately. We had growth last year of just over 3%, quite a strong year. And it's driven by a number of things. I would point to a very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially. They're not over-levered. And
a little more, I got you.
We see a good picture. Consumer spending has held up very well. As well, business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years, and those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so
it's pretty hot so far.
And they're going to work and they're consuming, so that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back, and what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before the pandemic in 2019, and that's good. Wages real wages are now positive, and unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So, labor market very strong, and again, signs of gradual cooling and rebalancing, so that supply and demand of workers is coming back into balance, just as we would want. Inflation, it's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out. And I'll stop there with the economy. Thanks.
Wow.
Thanks very much. We'll be digging into some of that later in the discussion, but now I'd like to turn to President Knott.
A little hawkish there. I mean, it's not bad. It's not like he's suggesting, oh, it's horrible. He still expects inflation to come down towards the second half of the year. His confidence gone down a little bit. Nothing about rate hikes here. Okay, kind of, it seems somewhat neutral, but neutral to slightly hawkish is what I would say.
The signs of recovery are clearly there. We started off the new year much stronger than we had expected.
How much do we want to listen to Knott? I don't know, because we could also just, in the meantime, jump on over quickly and just listen to or take a peek here. We've got AMC at about 96% right now. It's about 10.15. GME is still halted. Q's have been a little volatile there, sort of fell as JPOW got ready to speak and started rising again a little bit. We're only at about 4 bips right now. AMC's trying to move up again. Oh, smidgen of a move there. Trying to get some moves. We'll see how this continues to shake out. Microvision did just have a little bit of a hard...
All right, shut up, Kevin. Yeah, look at gold, by the way. Gold came all the way back down on what even Kevin just noticed was somewhat of a hawkish tone with Jerome Powell, which is different than what he said. And his stance, he didn't say much different. Again, the thing about Jerome Powell, family, is he has a fine line that he has to battle, right? He has a fine line that he has to juggle, right? He has to try to be honest about what's happening, but not in a way that's going to really make these markets go crazy.
So overall, a good picture looking at the data so far. The labor market is...
Yeah, this is CNBC's way behind. This seems to be pretty accurate right now, but just confirming.
Balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before.
Yeah, that's redundant because we already heard that. We're here now. This is live.
We know that such reallocation is very productivity enhancing. But in Europe, we chose a different approach. We chose an approach that was focused on job security. The governments essentially took over the wage bills of the firms. And as a consequence, we froze the supply side of our economy for a couple of years. Then during this period of stagnation, there was a...
All right, we're just want to see, why are they so behind?
It's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now...
Yeah, no, they're like 4 or 5 minutes behind there. Anyway, doesn't really matter. We're kind of wait to see what's going on here. Watching Tesla, 1.88%. Plug Power's got a little bit of a bleed. Trying to see if I could find... Bitcoin's still moving down. 61.4 right now on BTCs. Let's see here. What else? Qs, 6 basis points. Okay. AMC, GME, somewhat back. Both are unhalted. GME is at 80%. AMC's at 101% right now. So watching these. Let's see if we get a question here for these folks.
Mainly on the back of goods and food price inflation that is coming down. Services inflation has been resilient for a while, but we're now also seeing the first signs of improvement there. And that has everything to do with a slow but gradual moderation of wage growth, which is quite essential, I think, also going forward in making an assessment of inflation risks. But all these developments clearly point toward further disinflation. Also here, an intriguing question is, of course, is there more similarity or are there more dissimilarities with the development in the US? From the onset of the inflation shock, it was clear that the balance of root causes between, let's say, positive demand shocks and negative supply shocks was different in Europe from the US. The US had a much stronger demand component. I think we had a much stronger supply component. Yet at the same time, there was a remarkable synchronicity if you look at the development of
Okay, I'm just going to pull off here for a moment. Just watch BTC here. 61.3 kind of keeps bleeding a bit here. A little interesting. Sunrun up about 9%. Also a bit of a bleed there on Tesla. Can't get back up over that 175 line. And continues to bleed down. DJT's up 4%. $54 right now. Intel's up about 1%. Watching some of the AI plays down about 0.5%, relatively nominal. You've got Etsy at about 3% here, pretty nominal as well. As we wait for JPOW to start yapping again. Okay, so let's see.
And as Kevin yaps, I yap. We do have gold pushed all the way back down, guys. We do have NQ, ES, YM. We have all the indices still pushing a little bit higher. So I would assume that as of right now, based off the tone so far, I mean, the markets are, it's really not much to go off, to be honest, but, you know, indices are still increasing right now to the upside. Gold is falling, man. Gold ended up tapping up into the 2361 key level that I had marked off and essentially literally pulled a U-turn and now reversed all the way back down. But we do got to credit our exit here, right? We do got to credit the exit that we took on the sells that we initially took because, boy, we ended up saving ourselves a nice little loss here, right? Again, I was initially risking around 1% on that position. And we definitely would have got lost. We definitely would have took a L on that one position. So I'm glad that we got out when we got out. And it's a beautiful trading day when we were able to manage our positions the way we did. Now, in terms of gold, we got to see. I mean, we're going to continue to ride these moving averages higher here. We got to see what happens with these moving averages and see if gold is going to continue to shoot up or if Jerome Powell says something that causes this thing to fall.
Some people have said that looks hot. What do you think of today's reading?
Revisions.
More broadly,
Here we go.
Is there a risk that inflation becomes a lot more of a problem in the US than it is elsewhere?
Here it is.
So we had a producer price index reading just a couple of hours ago, and I would say it's actually quite mixed. You know, the headline numbers were higher, but they were backward revisions, and you know, we're of course disassembling it, taking it apart, and looking at it. And I think markets and analysts are looking at it as I wouldn't call it hot. I would call it sort of mixed. But in terms of the overall picture for inflation,
mixed.
I think you have to go back to last year where we had historically fast disinflation. Inflation came down by two full percentage points last year. Why did that happen? It's really two forces working together. One of them is just the reversal, the unwinding of the pandemic-related supply and demand shocks. So that we thought we would always get that. We thought we'd get it in 2022, and we didn't, and then it really arrived in 2021. So that was a big part of this, was just the reversal of distortions, really, to both supply and demand. The second thing is just restrictive monetary policy, and restrictive monetary policy cools the economy and makes room for the supply side to heal, but also lowers demand and ultimately lowers inflation. So I do think those two have been working together. And the question you ask is inflation going to be more persistent going forward? I think, and that would essentially mean that we've gotten the supply side gains that we're going to get, and now it's down to lower demand, which would take longer and potentially be more painful. I don't think we know that yet. I think we need more than a quarter's worth of data to really make a judgment on that. We know that there are still, businesses still report that there are shortages and labor shortages and things like that, which are now being addressed. In addition, even when the shortage is alleviated, there should be lags before that shows up in economic activity and inflation. So there may be some more there. I don't want to give up on it yet at this point. I also think that, having restrictive policy, we have the highest interest rates in some time. I think that it may be that takes longer than expected to do its work and bring inflation down. I am confident that we will do that, but that we will get inflation down to 2%, and ultimately we will do what we need to do with our policy rate.
And just to bring in a question that one of our members of the audience
I didn't like that line. I don't want to give up on it yet. It kind of implies that he's thought about giving up and maybe saying we need to raise rates again. That's weird.
% target will not be possible with the current level of the Fed funds rate.
So I think, as I just mentioned, I do think it's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive. The question is it sufficiently restrictive? I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
And is there any particular component of inflation that concerns you? A lot of people in the US have been focusing on housing and that segment, but is there that, or is it something?
Good questions, by the way, from her. I like this.
3 buckets, the first of which is just goods.
No, not again, J-Powell. You do this every time.
It was negative for 25 years, mildly
Goods.
negative because, of course, globalization and many goods were manufactured elsewhere and shipped at lower costs. So
housing services, non-housing,
is performing broadly as expected over time. We had very high goods inflation at the beginning of the pandemic because of the supply chain issues. That came down a lot, and I think we expect that. Housing inflation has been a bit of a puzzle because current rents have been low. Current rent increases have been low for some time, but they're not showing up. That's not showing up in rollover leases and in owner's equivalent rent. So, I think what we've learned is that the lags between a decline in market rents and it showing up in the measured inflation for housing services is long. Their lags are longer than we thought. But as long as market rents don't go, as long as they're going up at very modest levels, it will show up. It's just a question of when. I think our estimate of the lags is there. And so you've got to look at that. That may affect your confidence, but we have to wait for it to happen. In terms of the biggest part of it is services inflation, non-housing services, and that's more than half of the index. And it's less interest sensitive. It's very sensitive to wages and that kind of thing. We had made some progress there, particularly if you look at the market-based aspects of it. But that's the one that I think may take the longest. At the same time, it doesn't need to go to 2%. It wasn't at 2% before the pandemic. You need the 3 of those to come out in some way that they're at 2%. And I'm confident that we will get there.
Excellent. And just to go back into this theme of divergence, I mean, to summarize your answer, it seems that, you think the geopolitical aspect of the Europe being closer to Russia, and also the aspect of not only the scale, but the design of the fiscal response, are the primary drivers of this divergence that we've seen between the US and Europe. Chair Powell, what would your thoughts be on this? Are there other factors that you think are worthy of consideration when trying to understand why the US and Europe seem quite different economic beasts at the moment?
So I agree with all of the factors Klaus laid out. I would add we're probably also benefiting from a sort of strictly accounting GDP standard from new workers coming in to a large extent. I think the issue really is, and this is an issue that that the European economic policymakers are very, very focused on right now, is over the longer run, Europe's productivity growth has been about half of the U.S. And so ultimately, all you've got is hours worked, and that's largely a function of population, hours worked, and then output per hour. That's going to be your economic activity and growth. And so productivity is, really the thing that can enable living standards to rise over time. And, there are a lot of theories on why that might be. I think from an American perspective, I would tend to point to the more flexible labor market, and also a more fully built out set of capital markets, which is parts of which are very focused on funding early stage innovative companies. So it's not just a bank-centric system. We've got a very highly evolved, financial system. That may be another factor.
Yeah. So plenty of other reasons there that are worth mentioning, I think. Turning back to you, President Nutt, you gave a pretty clear signal, I think, that we're going to see a move in June. But a lot of the questions that people have put to us today have, stressed this point of, usually there's been this sense that the ECB has been following the Fed, and it's raised a bit of a question mark as to what degree can the policies of, the two major global central banks, with apologies to the Bank of England, how much divergence can we really see? So, to what extent do you feel constrained by what the US central bank does, and would you perhaps be reluctant to cut in July should the Fed want to, stamp at and leave rates as they are for the foreseeable future?
Look, I think if you talk about monetary policy of big central banks like the Fed and the ECB, that monetary policy always takes place in a global context. I mean, our markets are...
I have to say, I don't. That didn't really sound like horribly hawkish, especially since J-Pow basically just washed the fact that
Yeah, just a quick update as well, family. Again, if you are in my Discord, right, in the section right here, right, the news feed section in the Traders Lounge, like they're literally dropping all the top quotes that Powell's saying right there as well, right? So if you are not catching up on some of the big quotes, you can always come back here to the news feed section and literally see exactly what he's saying in real time. Like they're literally updating this damn near every minute Jerome Powell opens his mouth and says something cool or something that we should know of. They literally drop it right here. And this is all automated too, which is pretty cool. So I'm kind of glad that I added this section, to the Discord. Even if you're not going to be able to watch this entire thing, anytime throughout today, this will always be here, right? You can always come back and just look at, some of these headlines, right? Some of these headlines, like this one right here is one of the ones that stood out the most. Like I said, my confidence in inflation moving back down is lower than it was. That's not good, right? That's I wouldn't call it hawkish, but like bro, the market don't want to hear that your confidence is moving back down. So like these ones with the red marks are like the real notable ones that could really impact the markets that we could be aware of. But yeah, this is pretty cool. This little feature that I added to the actual Discord, just in case you guys want to just look at the headlines that way. That's a way to do it.
7%. Sunrun's 8%. Sunrun's bleeding out a little bit. Tesla's getting rejected by the 175. Enphase basically pulled down to about 114, 115 over here. Lemonade's bleeding out a little bit. So you've got a little bit of bleed going on here.
Look at indices.
AMD turns green. SPY.
Yeah, indices are pushing right now too. See, indices are really enjoying what Jerome Powell is saying right now. We got the NASDAQ pushing up higher all the way up to 18,350s and still pushing. We got the S&P 500 pushing above 5250. We got US 30 pushing above 39,600 as well. And US 30 looks like it might be lagging as well. Because the other ones, these two brothers are pushing, especially the NASDAQ. The NASDAQ is clearly being impacted the most. But US 30 is like kind of lagging a little bit here. Gold as well. Gold is kind of stuck. We had a nice push up to the 2361 levels. We pushed all the way back down. And now we're essentially just reacting off of this 2354 level. Interested to see what actually happens here, right? Are we going to push back up to the highs and continue to run? Or is this now going to fall off? I would assume we push back higher just looking at what indices are currently doing. I would assume that, but who knows, right? Who knows? We'll see.
The cache refreshes. You might have to refresh your browser, but once that cache refreshes, I think you should be in the clear there. But yeah, you can kind of see a summary of what was said so far over there, and we'll do a little video review as well.
Yeah, we also got the dollar as well, really holding this support at around 104,500 right here. And it looks like the dollar, I don't know, the dollar is kind of interesting to see right now, right? It looks like it wants to go higher. Um, but just the way that indices are reacting, and also I don't know how to take Jerome Powell's tone. I mean, family, so far based off those question and answers, like how do you guys feel Jerome Powell's doing, right? Is he a little bit more hawkish? Is he more dovish? Again, for those of you guys that don't know what that means, hawkish is, I wouldn't even say hawkish, right? Because again, hawkish refers to the sentiment on the Fed's idea based on raising interest rates, right? In the simple words, hawkish means that they're closer to raising interest rates than they are lowering interest rates. A dovish Fed means they're closer into lowering rates than actually raising interest rates, right? But how do you guys feel so far based off the sentiment, right? I mean, you guys can even just say bullish or bearish, right? And when we're talking about bullish or bearish, let's just use that in terms of the Nasdaq, right, or in terms of gold. You know, how are you guys feeling so far based on his approach?
Over time. And also, I would add, a part of that is sticking to our knitting. Don't take on politically fraught issues that are really not our mandate. Do your job and explain as best you can what's happening in the economy. Of course, the economy has, the post-pandemic economy has surprised everyone. I wouldn't single out any single central bank or group of forecasters. It's just been many things that were not supposed to be able to happen have happened. Nonetheless, we've made real progress on inflation. We're far lower than we were. I would say the risk that at the beginning we were very concerned that the very high inflation we saw might be quite difficult to bring down without a kind of very significant decline in employment and weakening economic activity. That didn't happen. That's just a great result. I think people are unhappy. You mentioned people are unhappy. That I fully appreciate that. And a big part of that, I think, is go to the store. Prices are high. You tell people inflation is coming down, and they think, I don't understand that. You know, the price of all the things that I buy hasn't come down.
Right.
So, they're not wrong. I mean, they're suffering. Particularly people at the lower end of the income spectrum are very hard hit by inflation from the start, which is why we're so strongly committed to restoring price stability and keeping it in place as long as possible.
And just to turn back to Europe now and to the Netherlands in particular, you know, we're sitting in a venue here that's really testament to the power of trade, for good and ill. In an era of deglobalization, when we're seeing daily headlines about tariffs, and how does the Netherlands as a small open economy, and indeed the Eurozone as a very trade-dependent region, really thrive?
Yeah, that's a difficult question. I mean, it goes beyond saying that this is a development that is absolutely not a positive development for the euro area, and that we watch with a lot of concern.
And as this guy talks, again, keep in mind, we do have CPI tomorrow. So Jerome Powell could be talking in a way that he knows what's going to happen tomorrow. Because he will look like a fool if he comes on here, right? Very dovish, very optimistic. Inflation is in the great path. But then tomorrow, CPI increases, right? And CPI comes out a lot higher than expected. So I think he's trying to really balance that line of being somewhat bullish, somewhat bearish, somewhat hawkish, somewhat dovish, but not going too, he doesn't want to steer too much to one side and then look like an idiot tomorrow. All right, so that's definitely one thing we got to be aware of with tomorrow's report. He could be trying to juggle, you know, his thoughts and opinions to where he's trying to stay as neutral as possible, which is what he's supposed to do anyways. But that's something that's going to be interesting for sure.
That it puts on our capacity jointly and internationally to solve global problems in a fragmented world. Suppose we had a global financial crisis again, like in 2008, 2009. It would be much, much more difficult to get the G20 around the table and to agree on a concerted remedial plan as we did in 2008, 2009, think about climate change, etc. What can we do about it? Well, I think in Europe there is still a lot of untapped potential to at least strengthen our internal cohesion. We're not tapping the full potential of the single market. In many, many places, the single market only exists in a name. We don't have capital markets union. I think we are really doing ourselves a disfavor. We don't have a banking union yet. And so we are missing out on opportunities to strengthen international trade, or sorry, inter-European, I should say, trade and integration, economic as well as financial.
Would you have anything to add on this topic? I know it's something that's featured in the Fed minutes about the links perhaps between trade barriers and inflation and so on. Do you see it as a risk?
So this is a very, very hot political issue, not just in the United States, but everywhere in the world. And not trade policy, of course, not the job of the Fed. So, I mean, we, as I mentioned a few moments ago, I think we need to resist the temptation to just have opinions on all different kinds of economic policies, as fun as that might be. You know, the elected government has to deal with these things, and they have to deal with the public on them. And they've given us really important assignments, and I think we need to honor the decision not to give us that.
And I appreciate this is also an awkward topic, but it is deficits in the sense that the national...
Deficits are an awkward topic. Hey, you're out of money and severely in debt. Let's talk about it.
life trickier as Fed president, Fed chair rather too.
I don't think it's not that it makes my life more difficult or the Fed's work more difficult, but I think it's you know, utterly non-controversial to say that U.S. fiscal policy is on an unsustainable path. Not that our fiscal position itself is unsustainable, but the path is unsustainable, meaning that we have full employment and we're running big structural deficits, and it's, you know, we're going to have to deal with this sooner or later, and sooner is a lot more attractive than later. I do hear from elected people on both sides of Capitol Hill and in both political parties that they do understand this. Mm-hmm. And I think you mentioned the Congressional Budget Office. I think everyone should be reading the things that they're publishing about the U.S. budget deficit and the path, and should be very concerned that this is something that elected people need to get their arms around sooner rather than later.
And you've noticed a lot, you've noted a lot that these supply side benefits that you thought might come, in 2021 or 2022 did actually arrive in 2023. Now, what sort of benefits from the supply side do you think we could see in 2024 and beyond?
So I think we probably have realized most of the reversal of the pandemic supply side effects, but not all of it. But I think we could get more sort of the final parts of the supply chains really getting sorted out. As I mentioned, the surveys of businesses, they still say there are shortages. They still say that they have a hard time hiring people, for that matter. So I do think we're still getting very substantial numbers of people coming to the country and going to work. Let me add, immigration also not a policy that the Fed works on or has opinions on, but I'm just giving you the straight economics of it. People come in, they can get a work permit, they are getting work permits, and they go to work and they're paying taxes and they're creating economic output, and there are millions of them. So it's alleviating the labor shortage that we had in the industries that really had it the worst. So I think all of that, it probably helped at the margin a little bit in cooling the labor market off. It's both supply and demand, but we think at the beginning, in the longer run, it should be neutral on inflation, but in the short run, it might have been positive. So I think that's a factor too.
And just to kind of turn to these broader demographic trends, there's been a lot of talk in recent years about how they will impact inflation, whether they have some sort of impact on R star, the kind of, the Goldilocks level of interest rates in the longer term, one might say. I mean, how do you think about these kind of longer term demographic trends and other factors and how they're going to influence where you see this kind of magical Goldilocks neutral rate of interest?
So the R star, for those of you who aren't central bankers who read every word of every story Claire writes about us, R star is really a longer run concept. R star is a neutral interest rate that would neither push up on economic activity nor bring it down at some hypothetical future time when we're at full employment, we're at 2% inflation, and there are no shocks hitting the economy. So think 5-6 years down the road, there's this sort of nirvana out there. Its relevance for current policy making is kind of limited, and I think you need to say that. Really what we're doing in an FOMC meeting is we're looking at the broad effect of the things that we're doing on the economy, and we're asking ourselves, is policy tight enough? Is it too tight? We're looking at what's happening in the economy. We're thinking about lags. And it's not a debate over the level of R-star, because that's a longer run concept. Now, and the argument is made that R-star will go up, and this is a debate that economists have been having for some years now, but the idea is, between deglobalization and the need to fund the energy transition and perhaps the need to spend more on military and the aging of the population, bigger deficits, higher, all of that could push up what is a neutral rate. And I think those are the interesting debates to have, but ultimately we're not sitting around wondering what the longer run neutral rate is when we do policy. When we make policy, we're thinking today, is our policy delivering what the economy needs to move it toward the mandates that Congress has given us: stable prices, maximum employment.
So would you divorce it? I think why this has come into focus, if you like, is because now that cuts are being considered in some parts of the world. At least there's this sense in which people are thinking, how low will rates go? Would you see that as part of the kind of R-star debate, or would you want to divorce the two factors of this current cycle and where R-star will end up being?
I think the R-star debate runs in the background, but again, it's a longer run concept. You could, if you wanted to think about a shorter run R-star, that would be more relevant. But that's not the way we think about it. We think about the effect of the things we're doing on financial conditions more broadly and on the economy. And how is it affecting the economy, and why? And all of those things lead us to believe at this time that policy is restrictive, and that it looks like it will take longer for us to become confident that inflation is coming down to 2% over time.
And how is this debate occurring around the table in Frankfurt at the ECB about longer run interest rates, or even, where are we going to end up? What's the rock bottom for this cycle?
Yeah, I mean, that's of course a difficult question to ask, because there are so many moving parts here. But what I would say is that if you look at the likelihood or the likely nature of the shocks that will hit us in the future, we came out of a period in which we had globalization, which was a slowly moving...
The Qs are vomiting right now. I don't know why.
It's for ever lower prices coming from the rest of the world, which meant that for almost 10 years, we continuously had to approach our inflation target from below. We had a low inflation problem. Going forward, with fragmentation, with aging of our societies, in my view, it's more likely that the shocks hitting our economy will actually be of the nature of negative supply shocks, not positive supply shocks. And if you think that through, that means that probably we will have to approach our inflation target more often from above than from below. And that probably suggests that we are not, that at least I don't regard it very likely, that we will move back to the time in which we had a continuous sort of our fairly persistent low inflation equilibrium with very, very low interest rates. We probably have to, on average, run a slightly tighter ship because of the nature of these shocks that are currently relevant to our economy.
And just to come back to something that I think has been kind of in the background here for quite a lot of the discussion about high interest rates taking possibly a while longer to have the desired impact on some pockets of the economy. How do you see that? Is this a legacy of this very low interest rate era? And how do you really address that when it comes to monetary policy? That is there just going to be this lag from now on that didn't exist, say, relative to pre-2008?
So I think if you look at the bigger picture, we've seen, the labor market's a good place to see this. You've seen demand for workers cooling off pretty substantially. The ratio of vacancies to unemployed people, for example, has gone from more than 2 to 1 to now 1.3 to 1, and it was 1.2 before. So that's a decline in demand. That's demand related. You also see wages coming down. You see quits coming down. So I think that tells you that policy is probably restrictive. I think it's also fair to say, though, that the U.S. economy is different this time for a couple reasons. One is that people financed themselves into very low rate mortgages, and now they won't move because they would be moving into a higher rate mortgage if they did, and they would be throwing a lot of value away. The same is true of businesses, many of which
This time is different.
have termed out their debt. And so they're not feeling the effects of interest rates. So it may be that policy is hitting the economy not quite as strongly as it would have if those two things were not the case. Notwithstanding that, I think the overall picture still is policy's working, it's weighing on spending, it's weighing on interest-sensitive spending, and it's certainly weighing on the labor market. It's a question of restrictive policy. As I mentioned, our policy is the highest it's been in quite some time. The rate is, at 5.25% to 5.5% is high relative to recent history. So we think that it's probably a matter of just staying at that stance for longer, and that's how we're thinking about it.
And I mean, you note about housing and about the standard model in the US being I think I'm right, the 30-year mortgage is kind of the standard mortgage product. I think here in the Netherlands, flexible rates are quite more fixed rates.
Yes, absolutely.
So fixed rates are quite common too, but I imagine with shorter
10,
shorter
15,
duration.
an average mortgage, I think, has an average maturity of like 16 years. Of course, that's a little bit endogenous because of the low interest rate period we had for so long that, of course, mortgage holders tended to extend the maturity. So now, lately, it's been coming in a little bit. But still, we have a lot of fixed rate borrowing in the Netherlands, and that has, of course, also mitigated the impact of the monetary tightening, which has been stronger in those areas where there is more variable rate.
Yeah, I'm gonna be honest, family. Like, if you are also jumping into positions right now, you guys are brave. I'm chilling on the sidelines. I'm not in no hurry to try to jump in because everything's been extremely mixed as a whole. There's been times where he sounded very hawkish, saying things like, "Oh, our confidence is lower about inflation," but then there's times where he's kind of dovish and he's bringing back, some strength back into these markets, some confidence back into these markets. So I'm staying out. Listen, I am not going to be putting my money at risk or any of my accounts at risk right now. It just doesn't make sense to me because there's not one side that's really dominating over the other. But listen, y'all do what y'all want to do. That's your accounts, that's your trades, that's your money. Y'all do as y'all want. But I'm chilling personally. I'm gonna just let this go.
How much of an issue has that been for you in the US, where we do have this, where capital markets play a far greater role, and where, for reasons that were never quite clear to myself, the turn of the year, the markets were predicting, 6 interest rate cuts by the Fed, and pricing credit off the back of that, and there being quite a big, quite substantial growth in lending and refinancing over the first couple of months of the year. How much more difficult does that really make your task that the banks aren't as big a vehicle?
For what it's worth, it's a minority of intervention, but banks are still important, and particularly for small and medium-sized businesses that don't have capital market access. And credit has been tighter for some time now, particularly in the wake of the turmoil we saw earlier last year. But still, credit growth has been modest, and that's another sign of tight financial policy. So that's part of the picture. I think the fact that we have capital markets are so important for many consumer loans of various kinds wind up in the capital markets or securitized and are not held by banks. It's just it's a very healthy credit machine for people, but they're feeling these higher. Those are short-term interest rates. I think that the ones that are longer-term interest rates are the ones where they're not feeling it, and that's really mortgages, and that's companies that have turned out their debt. I think other forms of consumer debt are short-term, and the surveys show that people think it's not a good time to buy durable goods like cars and washing machines, and the reason is it's a floating rate loan at a very high level.
Yeah, absolutely. And when you look at the banking system as a whole, we've seen some jitters, I think, on both sides of the Atlantic, but on the whole, it seems both systems are relatively stable, despite quite substantial rises in interest rates. Has that surprised you at all? Maybe first to Chair Powell and then to President Knott.
Has it surprised? Not really. Our banks are particularly our large banks are strong, well-capitalized.
They're on the banking segment now, which is a little on the boring side. I think once he gets off the stage, you kind of clear for a bullish catalyst, but we'll see.
Why the recovery broadly around the world from the pandemic has been strong as opposed to the one from the global financial crisis is that the very large financial institutions came through just fine. The U.S. banking system overall is in good shape. Banks are making loans, as I mentioned. Credit conditions are a bit tight, but that's part of our policy. So I wouldn't say I'm surprised. I think we obviously had a period of turmoil early last year, and we acted pretty quickly to stem the turmoil and also to go to work as a supervisor and make sure that banks had good plans on liquidity, had capital, understood the portfolio losses that they have for longer run securities, and are in a position to understand and manage those.
Well, I think it's pretty clear that if you have such an unprecedented rise in interest rates in such a short period of time, that this constitutes a massive shock to the financial system. So when we were sort of in the process of tightening, of course, this was sort of enhanced monitoring, an area for enhanced monitoring. Now, I think we can say so far so good. I entirely agree with Chair Powell that the core of the financial system has held up quite well. And I think this is in part, I think the success of the financial reform agenda that was rolled out after the global financial crisis under the aegis of the Financial Stability Board, which was very much focused about stronger capital, stronger liquidity, stronger risk management at the banks, which were at the core of the financial system, and that has clearly paid off. Now, there have been some idiosyncratic accidents here, the second-tier US banking system, Credit Suisse, but I think there were idiosyncratic factors behind it. The banks that arrived into trouble in the US were not even part of the Basel III arrangement and the financial reform agenda. But I would say so far so good. The question marks today are much more in the non-bank financial intermediation space, where we have seen a couple of quasi-near-miss accidents, I would say. The Dash for Cash, the LDI, the Archegos, the commodity traders in February 22. So these have all been pockets of vulnerabilities where you saw a combination of excessive liquidity mismatches combined with pockets of hidden leverage that we were unaware of before. And that is now also front and center of the work program of the Financial Stability Board, much more the NBFI space. Of course, we have to learn the lessons from the few banking failures that we did see, and that is continuous.
Oh yeah, just a few banking failures, don't mind them.
My main focus is more on the NBFI space than on the banking space.
We'll come back to Credit Suisse because I know that's a topic that you've spoken about quite a bit, and a few of our audience have got questions on that. But non-banks, would you share that, that sense in which they're the big lurking danger in the financial system right now?
I guess I would say it this way. In the U.S., non-bank participants by non-banks in lending activities, for example, has been growing very, very fast. And it's a fairly new thing, and in many cases, whole markets are being now taken over, or now majority for non-banks. And so our job is to monitor that very carefully, because I'll say a couple of things. One, there hasn't been a downturn yet. You worry about very fast growth in anything. It just kind of raises financial stability questions, and you wonder, is it a bubble? What will happen, and will it deflate, and that kind of thing. And so you want to be watching it carefully. I will say, though, it's different. Some of the we've spent a lot of time looking at it. I just point to a couple of things. One is many of the lending structures are not subject to run in the way that banks have traditionally been. The funding tends to be from limited partners who have their investment locked up for many years, and they can't get it out. So as opposed to the danger with a bank can be that all the depositors want their money at the same time, and that's the traditional problem that we've been trying to solve with bank regulation for hundreds of years. But these are different. They don't have, and runs are responsible. Bank runs or things like that are really responsible for an awful lot of the problems that happen in one form or another. So the non-bank financial sector doesn't have that as much. Another thing is the ties between banks and the non-bank financial institutions are substantial and growing. So there's plenty of monitoring for us to do there. It's not obvious to me that at this point that it's a net loss to financial stability, but I would say our jobs are to monitor it very carefully and thoughtfully and understand the implications.
And just to return to the topic of Credit Suisse, we had a question submitted ahead of the event. In your keynote speech at the 7th Annual Conference on European Systemic Risk, you talked about events surrounding Credit Suisse. What can the Foreign Bankers Association, to which we're speaking today, and the Netherlands Bank learn about the collapse of the Swiss lender?
Well, I guess the main thing one can learn about the collapse of Credit Suisse.
All right, family, listen, I got to go ahead and jump off. I got to go ahead and start the rest of my day. After 11 o'clock, I'm done with trading. And I got to go ahead and do what I got to do. Right? I got to go make some moves. Got to go into my credit bag. You guys know the routine. But I do appreciate y'all for tuning in. I did drop the link to this video right in the chat. If you guys want to continue watching this through me, Kevin, go ahead, click on the link in the chat. You guys can continue watching it. If you guys do hear anything else that's very interesting, drop it in the Discord, man. Let me know. Don't keep me out the loop. Because I want to know, any juicy things that they do continue to say throughout the interview if you guys do continue to watch it. All right, but family, I do appreciate y'all, man. I love y'all. Thank you guys for jumping on. I'll be back tomorrow, same time, same place. And hopefully you guys all show up again and we can have another great time. All right, family, love you guys. Appreciate y'all, man. Have a great rest of y'all day. Let's get it.